welcome to CoinDesk Live. We are coming to you from Solana Breakpoint in Abu Dhabi. I'm Jen Sanasi, here with my co-host Marissa True. We are on day 2 of the event. Marissa, how was your night last night?
I had a date with a pepperoni pizza.
Okay.
The jet lag hit me a little harder than I expected, I will admit, but I did manage to spend a lot of the time with some of the ecosystem people out here who have their own exhibition booths. I actually met up my own team because they're sponsoring as well with the Shelby booth. So it's actually been great. I feel tapped in. I don't feel like I've missed out on anything.
People are really fighting through the jet lag and they're really enjoying themselves. I know yesterday we spoke about the setup that's just behind us with all of the workout equipment. People are really getting embedded into the deep in here. There's a lot of games to play, a lot of merch to be had. We're going to have some of it here at the desk for everyone at home who's wondering what I'm talking about. But the vibes have been top tier, I have to say.
They are top tier. And I think what's also been great is, as you mentioned, there was the gym setup. So if you want to go do a little workout, you can do that. But also we can't ignore the giant bonk slide in the middle of the arena.
Yeah, I love a good slide.
That's my conclusion for the day. That will be the way I exit.
All right. Well, this is the 5th Solana Breakpoint, the biggest one ever. There are more than 6,000 people in attendance. And the theme this year is revenue and returns. The I guess notion there is Solana is putting the mic in the hands of those printing revenue and delivering alpha. And those printing revenue and delivering alpha are going to be joining us here at the desk for the next 2 hours. Curious to hear from you, Marissa. What are some of the conversations you're looking forward to?
Honestly, I love this ongoing conversation about how institutions are entering the space and what that's actually meant in terms of catalyzing regulation conversations. Because I think previously when we were looking at these early concepts and the potential of this industry, everyone was excited, but it was still taking a lot more convincing. But as we're seeing institutions flood into the space, suddenly I think regulators are standing up and they're listening and going, hang on a second, what does this materially mean for us and how can we actually capture that opportunity? And then on a more global scale, how do we remain competitive against other markets? So for example, let's take the USA and the UAE. Who's really going to kind of win the race in terms of full-scale crypto adoption and integration into the economies?
And what does winning the race actually mean? I think that there are different regions doing different things and everyone can win their own race. As we've seen, there are very vibrant Web3 hubs all over the world. Right now we're in the United Arab Emirates. You're based in Singapore. I'm based in New York, all known for different things within this industry. And it's nice to see folks from all over, all those regions I just mentioned, under one roof here today.
I think it's also the case that we're not looking at everyone winning the race and hitting the same finish line, kind of like the space race. We're trying to address the different localized needs of each market and seeing what those solutions look like play out in each respect.
Well, at Breakpoint, there have been several big announcements that have come out yesterday. I know there's going to be more today. 2 of them that I know we're going to talk about on the broadcast later on today. One, all Solana tokens to be available to trade on Coinbase. And second, JP Morgan issued a $50 million commercial paper for Galaxy Digital on Solana. 2 major stories that really showcase the maturity of this industry, showcases that this industry is really here to stay. We're not going anywhere. And shows how institutions who maybe once were not so keen on this industry are really starting to see that it is the future of finance and starting to experiment.
Yeah, and they're not dipping their toes, they're getting fully into the pool.
All right, let's get to our first conversation to talk more about the Solana ecosystem. Joining us now is non-CMO of the Solana Foundation, Akshay BD. Akshay, how is it going?
Going well, thank you very much for having me.
Yeah, thanks for being here. Now, we're in the United Arab Emirates. You were telling us before we started recording that you actually moved to Dubai recently. Talk to us about the region, talk to us about adoption, innovation, and what you're seeing from your perspective.
Yeah, for blockchains, they're largely a digital phenomena where they're capital markets infrastructure for trading assets globally, and so everything lives in the cloud, but they often benefit from partnering with the land, by partnering with techno-progressive jurisdictions, because ultimately we still need regulation for realizing the vision of a unified marketplace for all kinds of assets, from meme coins to equities to bonds to these sort of ETFs that package many assets into one. And we try to take Breakpoint to a new location every year where we see the tailwinds for adoption of this technology. And the UAE has been a front runner in being a jurisdiction that is sort of like, it's almost, if you meet folks here, it feels like you're meeting the business development team of a Fortune 500 company that is convincing the best talent and capital pools to move here. And that is in sharp contrast to many jurisdictions that perhaps treat regulation as a low priority and enforcement as a higher priority. And so I think the optimism and this pro-innovation stance taken by the UAE is a really unique and scarce resource in crypto, and we definitely want to be leaning into those jurisdictions.
So it was also just announced that the next breakpoint is taking place in London. So what was the thinking around London as the next destination?
Yes, we think that a lot of the tailwinds in the US around stablecoin regulation will eventually move east, and London has always been a hub for finance. In addition to having a jurisdiction that we think is going to lean into some of the things that the traditional finance industry is going to do on blockchains. It also needs to be a convenient place to fly to, good infrastructure, and so we're making a bet that the UK is, going to be, it's going to have a progressive stance towards blockchains as traditional finance finds a way to get involved.
Talk to us about your experience at Breakpoint so far. Marissa was telling us a little bit about some of the conversations she had yesterday. Last night I was at an event with a lot of Solana KOLs, a lot of retail traders, people who are just getting into the ecosystem. Some of them said that this was their first crypto conference ever. And on the other hand, we have big institutional announcements. We have CEOs from some major crypto companies and major financial companies walking the floor. What have the conversations been like that you've had here that really showcase the activity in the Solana ecosystem?
Yeah, I think one way to think about Solana is if we are becoming the internet native capital markets infrastructure, then all assets eventually will move to the network. This is perhaps obvious and overstated at this point because that direction of internet capital markets that we set for ourselves in late 2024 is starting to become a reality. You see commercial paper being tokenized on Solana, you see meme coins on Solana, you see X stocks, which are sort of these derivative-based equity instruments. You also see things like Superstate, that is a one-to-one representation of the stock on the blockchain, and uranium, gold. You start to see it now. You squint and then you can see a version of the future where every asset you want to buy is on the internet and it's available on your favorite brokerage app or fintech app, and you push a couple of buttons and you're able to buy or sell these assets at ease. Just like today when you have a YouTube video, and if you have a link to the YouTube video, you can watch it from anywhere around the world. But if you have cable TV and you don't live in the country where that channel is being broadcasted, then you have to deal with all these sort of siloed rights and negotiating partnerships with those cable operators to make it available. So the internet is available today, and what it did to content, it will do to finance. Outside of that, I think if you look into the future a little, you'll start to notice that the folks you met are all active investors. Over 50% of the flows in the US capital markets are passive flows. They're investing in a passively managed index of the S&P 500, say. And as the passive flows get increasingly higher, that's driving valuations higher, people want to hedge in case all these valuations that are starting to get somewhat lofty don't hold up, right? Because 30 cents of every dollar you invest into market cap weighted S&P 500 passively managed fund goes into the Mag 7, and that all of those big companies are making a bet on AI. So you're actually more concentrated than people think. It's not 500 companies, it's 7, and those 7 are making a bet on one thing, AI. And so you have what I like to call internet native active retail investors. These are, you saw the glimpse of this with GameStop. Most of crypto is active investors. They're not passively just buying, the top 10 tokens and calling it a day. They're actively thinking about what the next meta is, as we like to call it, or they have an investment thesis that they're deploying dollars behind. And so what Vanguard did to passive flows, Solana is doing to active flows. And that is the future, where Solana becomes an aggregator of active retail flows on the demand side, and on the supply side, you have what I described earlier, which is the everything store for financial assets.
You talk about the future of finance and the future of the internet, right? And you talk about these active investors. I'm curious to hear a little bit more about that future you're building towards. Is it one where investing becomes much more obviously accessible, but much more social?
Yes. Yeah, that's an excellent question. I think the answer is absolutely. Just like how Instagram made everyone a photographer, Solana will make everyone an investor. And the reason we have it at the arena in an arena this time is a hat tip to that, right? You can start to see it's becoming. This is a technical conference in an arena where comedians and musicians play, and we think that on a long enough time scale, that's what's going to happen. A version of the future is the Breakpoint becomes a conference where you have thousands of retail investors who show up to learn how to invest, learn how to construct their portfolio, and see content on stage where issuers come and launch assets. Maybe we have IPOs directly on chain. And that active retail investor audience is going to make a massive comeback over the next 10 years. And Solana is perfectly positioned to capture some of that.
So how do we productively educate people who are perhaps slightly less financially literate, which is typically what draws them into passive investment strategies?
Yes.
And basically encourage them to take the leap into a completely different market that still has very much a steep learning curve, despite the sheer amount of investment opportunity that exists within it?
Yeah, I would argue that a lot of retail investors are already actively investing in some form. Maybe they have a majority of their net worth or portfolio in a passive fund, but they're on Robinhood. They're trading GameStop. These volumes are coming from somewhere. The all-time highs and same-day options. On Robinhood, the meme coin trading. That shows you that there's like an appetite for active retail traders already. Now, they might be investing in assets that that are meme stocks or meme coins, and this culture is an integral part of investing. But where we can play a role is in bringing more productive assets on chain that can be a part of people's long-term portfolio, and helping them understand how to invest in a world of increasing uncertainty, right? Ultimately, when you're investing, you're trying to buy back your time, and you're trying to buy freedom, as I like to say. And in 1971, it would take about 25 hours of average US wages to buy 1 unit of the S&P 500. Today, it takes about 170 hours to buy that same unit of S&P 500, which means your freedom got 8x more expensive. And so everybody now has to actively think about investing in a way that and apply a disproportionate amount of time and effort in a way that they didn't have to 50 years ago, which is why this is becoming part of mainstream culture.
Actually, before we let you go, I mentioned some big headlines came out from day one. I know there are big headlines to come out from day two. I know you probably know what they are, so be careful when you answer this question. What's the biggest piece of news that's come out of Breakpoint that our audience who's watching at home should know about?
Well, I think it's hard for me to pick one. I would say I would probably pick one that shows you a glimpse of the future. Coinbase using their interface to allow millions of users to access assets on Solana directly is a glimpse of the future, because I think over time fintech apps will make the same decision, where they don't have to manage an order book and get a license and do all this liquidity management. They're just going to tap into the Solana blockchain to make assets visible to their customers. Maybe some of them are not interested in crypto products. They just want to show stocks. They want their customers to have the ability to buy stocks, and you just show them that subset of tokens, and on the back end, it's just settled on Solana, right? So I think that's one big one. I think another one is the Perps product that was launched recently. I think that's going to push the performance of the network and take advantage of everything that Solana has to offer and be competitive in the Perps marketplace.
Akshay, thanks so much for joining us at the desk and kicking off day two.
Thank you very much for having me.
Thank you.
That was Solana Foundation's non-CMO, Akshay BD. We are going to take a quick break. We'll be right back with more from Breakpoint.
From a small trading port to one of Asia's economic tigers, Hong Kong built a reputation on something rare: the ability to take fast-moving markets and give them structure. For half a century, global capital came here for one reason. Hong Kong knew how to turn frontier markets into functioning ones. Whether it was the first wave of Asian IPOs, the rise of multinational deal-making in the 90s, or the deep liquidity that defined the 2000s, Hong Kong made complexity investable. And now, the frontier has shifted again. Internet capital markets, a new system of finance being built at internet speed. And Hong Kong is once again doing what it does best, designing rules that invite innovation. This February, Solana Accelerate lands in Hong Kong, side by side with Consensus Hong Kong. We will bring founders, institutions, and policymakers into the same room, the same energy, the same opportunity, because Hong Kong turns experiments into industries. To get your tickets, head to solana.com/events. Solana Accelerate Hong Kong. See you soon.
Hey everyone, welcome back to CoinDesk Live. We are coming to you from Solana Breakpoint in Abu Dhabi. This is Solana's flagship conference. So no better guest to have here at the desk than Solana Foundation President Lily Liu. Hey Lily.
Hi, it's great to see you in person.
Yeah, great to see you in person as well. How has the event been for you so far?
We are getting better every year, and this year has been incredible. Absolutely incredible. It's our largest breakpoint ever. We didn't just get a venue, we got a stadium, and it is, the content is incredible, the audience is electric, and we also have just this wonderful experience throughout the arena.
So Breakpoint famously slashed panels and went for lightning talks and basically the rapid delivery of information. So how have those conversations kind of evolved from Breakpoint to Breakpoint?
Yeah, so I think that format really reflects what our values are as an ecosystem. We've always come at this as we ship products for users. White papers, it's easy to write a white paper, but it's really hard to ship a product. So we always wanted to feature products and not just product ideas, but actual product announcements. And so what we actually use Breakpoint for every year is a way to accelerate and kind of create a collective community milestone to actually go ship something so you can talk about it on stage. And so part of what we also do is we try to create this incredible experience and this incredible stage to make everyone look incredible, to also really honor all of the work, the hard work that people have put in. And so one of the reasons why we axe panels is because panels are not a great format to feature products and feature things that people have built, whereas these product keynotes are, you get the spotlight to talk about what you've built in exactly the way you want it. And what we've also found, the audience loves that. We do live in the world of TikTok and Instagram attention spans. And so when everyone can stay and listen to 5 minutes, it's like rapid fire for the audience, so they stay really engaged. And that's why we've got 1,400 seats in the audience. If you go take a look, they're filled.
We were just speaking to Akshay about the plethora of announcements coming out of Breakpoint. I want to talk to you. What have been the standout? I know we can't ask you to pick just one, but what have been some of the standout announcements that really showcase what's happening in the Solana ecosystem?
Sure. So some I'd like to point out. So Ellipsis, one of our supremely talented teams, they're launching Phoenix, which is a native Solana perps DEX. Super excited about that. Perps are obviously a really important primitive in on-chain finance, and so that we have this tremendously talented team standing that up and having done a lot of work over years, really understanding how to integrate market microstructure on-chain. It's a really difficult engineering problem, research problem, and much less to put that into production scale application. So we're really thrilled about that. I'm aware of this kind of critique we hear from time to time that Solana is only about meme coins. That's never been my experience. And actually, what I've experienced over the last year is, as institutions are coming into crypto, the ones that are coming into crypto, looking at this with fresh eyes and evaluating chains, evaluating infrastructure from an objective basis, they're always using Solana. And we also saw that yesterday with JP Morgan launching commercial paper with Galaxy, and Coinbase building that on Solana. And speaking of Coinbase, Coinbase announced that they are integrating Solana into a bunch of their core products, and that's also really interesting and really exciting. 'Cause typically, people thought about centralized exchanges and chains being somewhat fungible, and rather than being sort of partner infrastructure, where they can actually sort of collaborate with one another. And now we're starting to see that across the board.
So looking at Solana from the lens of its partnerships with institutions, its partnerships with regulators, what has been the most effective part of that playbook in terms of cultivating those relationships and actually seeing tangible progress in those conversations?
Sure. We always want to lead with tech and product. That is what we are, that's our strongest suit always. So that's always at the core of everything we do. We want to win on product. Now, product is not just the network, it's also the developer tooling around that. It is also the protocol adjacent primitives that you put around that. And it's also the applications that get built into the ecosystem. And it's so many enabling factors as you go up the stack. But at the root of all of it is we want to have the best network. We do have the best network. And what that means is, look, we're building tech for finance. So what does finance want? Finance wants fast, cheap, and liquid. That's why you'll hear us talk about IBRL, ever faster, ever cheaper, because we know that just given the way decentralized networks work and the limitations of physics, if you've got to communicate between two validators that are across the world from one another, from a pure latency perspective, you're never going to be as fast as servers that are centimeters away from one another. And thousands of kilometers will never be able to, just physics is never going to be able to beat out several centimeters. And so we're going to push on that front, but then also have to explore a lot of topics around market microstructure in order to be able to deliver a low latency, effective user experience. And that's many-year journey, but that's really at the core of what we do. That is the network as a product itself. And then beyond that, within the foundation, we've got folks that do everything from developer tooling to marketing to operations. And the role that each of those people have is to think about how can I enable that layer of this kind of overall ecosystem stack in order to empower in order to empower the ecosystem. How can we build better developer tooling? What are the product needs that we're now hearing from not just startup founders, but increasingly enterprise builders when it comes to, for example, institutional needs around privacy, payments needs around privacy? And how can we translate that into protocol adjacent or even developer tooling, application tool sets or frameworks, wherever that might most appropriately lie, in order for the Solana ecosystem as a whole be the best product for startup builders to enterprise builders.
We just spoke with Akshay about Solana's vision for the future, really being the infrastructure layer for the future of finance, the future of the internet. Talk to us a little bit about what needs to happen for the infrastructure to be able to support all the people that the internet supports today. Are we there yet? And if not, what needs to happen for us to get there?
So being fast, cheap, and liquid, and keeping those principles in mind is going to get you. It's very simple, but it's going to get you a lot of the way there. I think that, look, the game that we're in is what is the vision from Satoshi, the peer-to-peer electronic cash system, and then incremented by this revelation that Ethereum gave us that you could have programmable blockchains and have these decentralized applications. Now, you can build whatever you can build, but doesn't mean that it's actually an appropriate fit for a blockchain, separate topic. And so this kind of very grandiose dream that you'd have this native financial layer for the internet, 5.5 billion people, all of the users of the internet and all of their assets, liquidity, wealth, would be able to interact on the same financial rails. And that's what we have with content on the internet. We now take that for granted. And there actually was a point in time where it might not have evolved like that. There was a point in time where maybe it would have been the American internet and then the European internet or whatever, or however that would have been carved up. And instead what we now have is we have TCP/IP and protocols on top of that, which make it possible for literally all 5.5 billion people are using the same foundational infrastructure, and all the gains we have from that making communication globally seamless. Yes, there's segregation at the application layer, and there's infinite permissioning also at the application layer, and that is what we've become accustomed to. And so I think that now that we've experienced the joys and all of the and the empowerment of having fast, cheap, and liquid content, I think the question is how much of that carries over into the financial world, and I think quite a bit actually. I would say even more so, because when you think about financial markets, how oftentimes have we learned that that money is hydrophilic, right? Liquidity begets liquidity. Everyone says that. It's actually the most powerful network effect out there. It's even more powerful than the social network effects we've observed over the last 15, 20 years. And so if that's the case, then when you think about building tech for finance, of course you want to build technology which is going to prioritize the unification of liquidity. And that's something that has always been part of the perspective of Solana from the very beginning, because we've had clarity from the beginning that we were building tech for finance.
One question I have is when we talk about the expanding Solana universe and then effectively re-engineering the internet as we know it to have all these players seamlessly integrate and function smoothly, how much of that is also going to have to come down to collaboration with other ecosystems, other product players who are perhaps on other islands? What does that look like?
We are very open-minded about that. I think that one of the privileges of being in this open source world is you have the luxury and you have the mandate to think about positive sum games. And that's not really how the kind of capitalist system is really, the structure of the capitalist system is here's my balance sheet, there's your balance sheet. We compete on product and we try to accumulate as much resource as we can on my balance sheet versus your balance sheet. And it's worked out pretty well for humanity over time. But one of the really interesting parts around crypto is in order for crypto to be successful, you have to build a positive community. And so actually one of the inputs into that is the ability to find and to play positive sum games. And that's one of the things that I actually really love about crypto, that it's kind of easy. We're all kind of trained to be like, all right, my balance sheet, my product, your balance sheet, your product. And that is also true some of the time. But then one of the ways we think about it is if we have this permissionless liquidity, then that is actually helpful to a number of other ecosystems. And the way we encourage other ecosystems to think about it is instead of seeing it as Solana is another blockchain and competing infrastructure, think about it as every ecosystem has the native asset of the ecosystem and also to varying degrees, depending on what the underlying tech is, some degree of infrastructure. And so maybe we can collaborate on the asset side of your ecosystem, because let's face it, that's a really important part of everyone's ecosystem. And if your asset doesn't do well, your infrastructure is never going to do well, and that's just a fact. And so I think it's interesting to find these points of collaboration, and we've never really been PvP about things, because, also if I were to think about just even purely from Solana's long-term interests, I would say, well, if Solana is looking to be that financial infrastructure for 5.5 billion people and all of their assets, and we can't figure out how to work with other people in crypto, how are we going to move beyond that? And so as a result, I think what we just announced earlier today is that Wrapped XRP is coming to Solana. Monad was a very successful launch that we were able to support their ecosystem on a few weeks ago. And you'll be seeing a lot more in terms of crypto native assets that have large communities coming to Solana, because one of the things that we do quite well is we do DeFi very well. And we have an expanding set of builders building the full range of financial primitives that you might want to use or maybe not, but that's up to the user and that's up to the community. It is our job to make that available. And so you'll be seeing a lot more on that front.
Amazing.
Lily, thanks so much for joining us at the desk, and thanks for having us here at Breakpoint.
Thanks so much.
Thank you.
All right.
That was Solana Foundation President Lily Liu. We are going to take a quick break. We'll be back with more from Breakpoint.
From a small trading port to one of Asia's economic tigers, Hong Kong built a reputation on something rare: the ability to take fast-moving markets and give them structure. For half a century, global capital came here for one reason: Hong Kong knew how to turn frontier markets into functioning ones. Whether it was the first wave of Asian IPOs, the rise of multinational deal-making in the 90s, or the deep liquidity that defined the 2000s, Hong Kong made complexity investable. And now, the frontier has shifted again. Internet capital markets, a new system of finance being built at internet speed. And Hong Kong is once again doing what it does best: designing rules that invite innovation. This February, Solana Accelerate lands in Hong Kong, side by side with Consensus Hong Kong. We will bring founders, institutions, and policymakers into the same room, the same energy, the same opportunity, because Hong Kong turns experiments into industries. To get your tickets, head to solana.com/events. Solana Accelerate Hong Kong. See you soon.
Hey everyone, you're watching CoinDesk Live. If you're just joining us, we are coming to you from Solana Breakpoint in Abu Dhabi. This is Solana's flagship conference, and we're having conversations with folks from all across the Solana ecosystem. Our next guest joins us now. He's the CEO of Backpack, Armani Ferrante. Hey Armani.
Hey, thanks for having me.
Thanks for being here. Now, let's just start here. We're in the United Arab Emirates. I know that Backpack has become licensed here. I think one of the first licenses you received was from the United Arab Emirates. Talk to us a little bit about the region and the importance it plays in what you're building.
Yeah, I mean, I think one of the most inspiring things about the region is that it's, to be frank, just easily to get people here. One of the most challenging parts about building an international company, keep in mind we have offices and folks in Dubai, in Tokyo, in Australia, in the US, in Europe, we're all over the place. But we started our international kind of regulatory roadmap in the UAE because, just to be frank, we can get off our feet the fastest. And what we've seen is just an incredibly progressive environment here that is just as pro kind of innovation as it gets. And so whenever we're thinking about kind of setting up offices, setting up teams, and going to market in certain places, one of the first things is just simply like, how easy is it to just literally get an office and get set up? And I think the pace here has just been incredible. And we're seeing just a ton of growth, a ton of people in crypto kind of flooding into the region. And so it's definitely a place that I'm pretty excited about.
So it's been a pretty big growth year for Backpack. What are sort of the key markers of progress that you've had and that are really paving the way for 2026?
Yeah, so I think in 2025, there's certainly two things that marked our year. The first thing was simply the introduction of our margin system. We are, I think, maybe the first new exchange in the post-FTX world to reintroduce spot margin, borrow lending, perpetual futures, all cross-margin and cross-collateralized together, where ultimately what we're trying to build is a unified portfolio for all of finance. And to be able to do this not only for crypto assets, but to expand far beyond crypto assets into every asset in modern finance. And I think a big marker of a lot of the progress made on Solana, on Backpack, and really throughout the entire industry is to be able to actually kind of be at the center of this, I guess, inflection point where we're starting to see traditional assets come on chain because, I don't know, let's get real here. We're not here for tokenizing meme coins. Who cares about the price of your random dog coin on the network? We're here because we think that all of the world's kind of cash flows are going to come on chain. And I think over the past several years, we've been, really kind of focused from an engineering point of view in actually proving these, systems out as really proof of concepts, where you've seen a lot of toys, if you want to put it in those terms, which I guess are representative of the next big thing, if you want to use that term from Silicon Valley.
So we're looking at diversifying the assets that are available in Backpack. I know you've also had an expanded ecosystem strategy. I know you've also integrated Aptos as well, and APT. What role does that play on the crypto native layer of how Backpack wants to expand?
Yeah, so we want to be able to offer our users every asset on every protocol, on not only every blockchain, but every fiat currency, every stock, every bond, you name it, all in a single unified experience. And to be able to actually have your assets in one place and to be able to look at a user and say, not only is this safe and secure, but you have all the opportunity that you want. well, then you can actually start talking about fulfilling this dream of upgrading the financial system. And so whether it's new networks like Aptos or new fiat currencies in new regions, whether it's euros, USD, yen, or whatever it might be, it's all part of providing the maximum amount of economic opportunity for our users, no matter where you are in the world, no matter what network you're using, or no matter what you're trying to trade.
I just want to say one thing. I think there are a lot of people watching who care about the dog coins, large groups of them on X. But on a more serious note, you talked about digitizing traditional assets. I know that you have a partnership with Superstate to tokenize stocks. We talked to a lot of folks. We have talked to a lot of folks here at Breakpoint and beyond Breakpoint who are also looking at tokenizing stocks for their users. Talk to me about how you see the future of this. If we have tokenized stocks issued by different companies on all different exchanges, what does that mean for the user? Do you think we're going to see some kind of consolidation where we go to one or two places to access products like this?
Yeah, so I think there's maybe a couple ways to break this question up. I think the first thing is about access. No matter where you are in the world, you want to be able to pull out your wallet, pull out your exchange account, and be able to get access to global capital markets, no matter kind of what kind of region you're in. Right now, if you're in a developed country, it's very simple. If you're in the US, you can download Robinhood, buy stocks, no problem. But if you wanted to do something like as simple as maybe borrow against your Apple stock to be able to maybe buy a house, or to be able to pay for dinner, or to be able to just do something that maybe the more kind of financially privileged people in the world have access to, it's simply pretty challenging to do. And so I think the first thing is about giving access to kind of all of the sophisticated financial tools that I think a lot of people in developed markets take for granted, and to be able to bring it worldwide. And I think that's one of the key regions. I grew up in California. The U.S. is my home, but I've spent the past 3 years traveling the world, setting up kind of offices and in places where it's ultimately about global market structure that's borderless and frictionless for kind of the entire globe. And so I think access is just by far the first thing. The second thing is really bringing to bear everything that crypto has to offer, which is everything from real-time settlement, 24/7 markets, but also things like trust minimization. And so you might ask the question, like, why do I care about trust minimization? And it's all about ultimately minimizing error. So there's a lot of idiosyncrasies and the way traditional markets work that when you say it out loud, it might be kind of odd. Like, for example, a broker dealer can, for example, issue stock it doesn't have, which is super strange and super weird. And you're like, wait, how does that actually work? And there's plenty of cases and precedent where people have made mistakes, where they issued and sold stock that they shouldn't have issued and sold. And a lot of these types of issues that come from the opacity of traditional markets just don't exist in kind of this new market structure that's developing with tokenized assets on Solana and around the world. So ultimately, it's not just about access, but it's about this genuine upgrade to these traditional systems to be able to make them not only more efficient, but also more, crypto people might say, trust minimized, but just being able to have fidelity and faith that what you're actually looking at is not only canonical, but also correct. And it turns out turns out to be a really important feature in a financial transaction processing system.
Armani, thanks so much for joining us at the desk. It was a pleasure speaking to you again.
Yeah, thank you so much.
That was Backpack CEO Armani Ferrante. We are going to take a quick break. We'll be right back.
From a small trading port to one of Asia's economic tigers, Hong Kong built a reputation on something rare: the ability to take fast-moving markets and give them structure. For half a century, global capital came here for one reason: Hong Kong knew how to turn frontier markets into functioning ones. Whether it was the first wave of Asian IPOs, the rise of multinational deal-making in the 90s, or the deep liquidity that defined the 2000s, Hong Kong made complexity investable. And now, the frontier has shifted again. Internet capital markets, a new system of finance being built at internet speed. And Hong Kong is once again doing what it does best: designing rules that invite innovation. This February, Solana Accelerate lands in Hong Kong, side by side with Consensus Hong Kong. We will bring founders, institutions, and policymakers into the same room, the same energy, the same opportunity, because Hong Kong turns experiments into industries. To get your tickets, head to solana.com/events. Solana Accelerate Hong Kong. See you soon.
Hey everyone, welcome back to CoinDesk Live. We are coming to you from Solana Breakpoint, where folks from all across the ecosystem are joining us right here at this desk for discussions on how to bring us to the future of finance. I'm now joined by co-founder and managing partner of Multicoin Capital and chairman of Forward Industries, Kyle Samani. Kyle, how's it going?
Jen, Marissa, thanks so much for having me.
Okay, what's the most exciting thing you've done in the last 2 days?
I went skydiving.
Okay, that is very exciting.
Was it a first time?
Second time. I went skydiving like 14 years ago. But like the most iconic skydiving in the world is over the Palm in Dubai, so I had to do it.
All right, and I'm going to put you on the spot. Bring that back to Breakpoint.
To Breakpoint.
How
Oh,
does
I
skydiving, how does taking that risk and doing this beautiful thing bring us back to Breakpoint and how you're interacting in the Solana ecosystem?
Have you ever traded a meme coin? It's that risk. It's that risk.
The exhilaration.
It's the exhilaration.
The adrenaline.
No, I think in all seriousness, the thing I've been most excited about was I got some time backstage yesterday with the team from State Street. They just launched their new tokenized treasuries product. And I think we've seen similar announcements coming from JP Morgan, from some big firms out of the UK. It just seems like all of the major fund managers and asset issuers are issuing tokenized fund products on Solana, and that's just incredible to see.
So when we're talking about a Sol treasury, how does that take shape, and what is the plan there?
Yeah, so I launched Forward Industries. All right, I should say I led a $1.65 billion pipe into Forward Industries along with my co-sponsors at Jump and Galaxy a few months ago. Today, Forward Industries is the largest Solana digital asset treasury company in the world by about a factor of 4x or so. We endeavored on this because we thought there was a really interesting opportunity not to have a vehicle that holds SOL in public markets, but to have a kind of Berkshire Hathaway style publicly traded company that can use its balance sheet to make really accretive and strategic acquisitions in and around the crypto ecosystems and to apply Solana's technology in really interesting, disruptive, and potentially very creative ways to shareholders.
The next question I was going to ask you is I've seen some things circulating the internet, people saying that you're the Michael Saylor of Solana, but it sounds like the business model is a little bit different than Saylor's model. What do you think when you hear folks saying that? And tell us a little bit more about the acquisitions and the strategy for Forward Industries as we move into 2026.
Yeah, I'm very flattered whenever people say that. I've been hearing it now for a little while. I know Michael, and we had a chance to sit down with him a number of times. He's super awesome. I love the evangelism he's done for Bitcoin. The challenge with Bitcoin is Bitcoin doesn't do anything. It's your pet rock. You put it under your mattress, just sits there. Solana is not that. Solana has this thriving ecosystem of all these DeFi protocols, these DePIN teams. I was just talking earlier today with SoRare, this soccer NFT trading card thing. They migrated to Solana a few weeks ago. So you have all of this like cool activity happening on chain, and we've realized there's an opportunity to not only tap into all of that stuff to earn incremental yield for our shareholders, but to then obviously take this idea of DeFi and of trading that Solana provides and embed it into all kinds of applications and services around the internet. And so those are the kinds of acquisitions we're looking to do. I can't name names of specific companies, but I can say we are now actively in discussion with looking at a bunch of deals. And I'm optimistic that we'll be able to find some pretty out there ideas and apply, after acquiring those companies, put crypto in them in really cool ways.
Do you think all the digital asset treasury companies we've seen come to fruition over the past year are still going to be around in a few years from now?
Very unlikely.
Okay, what does that consolidation look like? Like who's gonna be able to weather the storm?
We at Multicoin, we just celebrated our 8th birthday. The folks at Jump have been trading crypto for about 10 years. The folks at Galaxy about 8 years or so. All of us have been through multiple market cycles, and we've all survived and ultimately thrived by making big decisions and big trades in bear markets. We have the balance sheet, we have the team, we have the talent to survive. And so we feel like, that washout is going to be a really great opportunity for us. The big challenge that this DAT market faces to consolidate is that a lot of these DAT companies have a lot of structure on them. I won't name names here, but if you go read the filings of a lot of these DAT companies, what you'll see is that a lot of the insiders effectively can block a transaction or have almost blocking rights on a transaction. You'll see things that, the MNAV on the public dashboard says 0.7 or 0.8, but they have leverage on their balance sheet, and so their MNAV net of debt is 1.5. And so you can't acquire that asset. There's DATs I've seen for other assets that 95% of the tokens that the DAT holds are locked. And so, these companies could easily trade down to 0.1 or 0.2 MNAVs. And I do think you're going to see a lot of these drift down into that range.
Is that going to be bad for the industry? Like, just talk to me a little bit about sentiment if that happens, because there are a lot of people who are very excited about DATs right now. Do you think that's going to be a hurdle that the industry has to overcome?
I mean, I don't think there's a reason to be excited about DATs, because like all they do is like, at least in their current incarnation, is like they talk on TV and then maybe buy some stuff. That's like not exciting. And that's not why we launched Forward Industries. I'm very excited for things to drift down to 0.1 or 0.2 MNAV, because that creates opportunity for us and for our shareholders.
So we've highlighted some of the shortcomings of this current generation of DATs. So what does that next version of it look like? What are some of the opportunities that we sort of identified that can carry the next generation of them into the longer term?
Yeah, look, at Forward, we are already doing a lot of those things. So we started running our own validator probably a week or two after the pipe closed. We announced at our earnings call a couple weeks ago that we are launching a prop AMM, which is basically an on-chain market maker on the Solana blockchain. That's in testing now. It's going to go live, I think, in the next few weeks here, maybe sooner. What's amazing about that is that if we look at some of our competitors, they are also announcing similar things, but they are announcing massive dilution to their shareholders to launch these equivalent initiatives. For Forward to launch a validator, for Forward to launch an LST, for Forward to launch an on-chain market making business, we've incurred zero incremental dilution to offer those services. I consider all that stuff table stakes. That stuff's not fancy. We got to do it, and we're going to do it. We're going to earn more yield for our shareholders. The real opportunity at hand is to go identify interesting assets in the world and apply crypto in compelling ways. And given our backgrounds at Multicoin, Jump, and Galaxy, given our relationships in the ecosystem, the trust we've engendered with all of these different parties, we think we are in the prime position to negotiate incredible deals for our shareholders.
Just before we let you go, I want to draw on what's going on at Multicoin as we head into 2026. What's your investment thesis? What are you really excited about?
I mean, our investment theses haven't really changed. We believe that crypto is going to power global finance. Solana is going to be the home of internet capital markets. And we invest at all layers of the stack, from core infrastructure and cryptographic primitives all the way up through applications. This year, we've been spending a lot of energy on prediction markets. We invested in Kalshi, we've invested in a few other prediction market teams, and we expect there's going to be a lot more really cool consumer applications in the years to come that embed crypto in a really fundamental way.
Kyle, thanks so much for joining us at the desk. It was a pleasure.
Jen, Marissa, thank you all.
That was co-founder and managing partner of Multicoin Capital and chairman of Forward Industries, Kyle Samani. All right, if you are just joining us, we are coming to you live from Solana Breakpoint in Abu Dhabi. Let's now take a look at what's trending in the news this morning. El Salvador is looking to become a global leader in technology once again. After being the first nation to adopt Bitcoin as legal tender, the country is now betting big on artificial intelligence. The government has announced a partnership with Elon Musk's xAI to launch the world's first national AI-powered public education system. The initiative will put the Grok chatbot into 5,000 public schools, aiming to modernize the curriculum for more than 1 million students and teachers. Our next story, Terraform Labs co-founder Do Kwon has been sentenced to 15 years in prison. A federal judge in New York handed down the sentence Wednesday for Kwon's role in a massive fraud scheme. The 2022 collapse wiped roughly $50 billion from the crypto ecosystem. The 15-year term is actually longer than the 12 years prosecutors had asked for. Kwon must serve at least half of that sentence in the U.S. before he's eligible to be transferred to South Korea, where he faces additional charges. And lastly, Coinbase is making it easier for AI agents to handle money. The company has released version 2 of its X402 protocol, a system that lets AI programs make stablecoin payments autonomously. This update adds support for more blockchains and fiat currencies. It also introduces new security features like wallet-based identity, allowing developers to build smarter and safer payment tools for the artificial intelligence sector. Those are your top 3 stories for the morning. Follow the latest news headlines on CoinDesk.com. And we're going to get right back to our programming here from Solana Breakpoint. All right, Marissa, we are getting through it. We've had some incredible conversations here at the desk. Some to do with centralized exchanges, some to do with decentralized exchanges, some to do with DATs.
Some to do with skydiving.
Some to do with skydiving. Have you skydove before?
I am cripplingly afraid of heights. However, I will say that I'm not actually opposed to skydiving, but I don't think I could bungee jump.
Okay.
I don't know what it is, but there's a different relationship with height there that I don't fully understand. But I think I could do it.
Okay, well, no, it's a no for me.
It's a no for
It's a
you.
no for me on all fronts.
Got it.
Yeah, for someone who works in this industry, I think I'm very risk averse when it comes to adventure.
I mean, I think just by stepping into this industry, there's naturally a risk inclination.
Yeah, there is, but I'm not going to be jumping out of planes or off any buildings anytime soon.
But buying a token, perhaps?
Yeah, that's my jumping out of a plane.
That's
I get
the exhilaration.
a little bit of adrenaline going, a little rush.
That dopamine rush.
All right, yesterday we were talking about the Seeker phone here at the desk with Emmett. You and I took phones home.
Yes, for a
And
little early experimentation.
We did some early experimentation. Talk to me about your experience.
So I actually had a great time unboxing, just pulling the foil wrapper off and opening up the case. It loaded like a dream. It was a really seamless setup. I will say it was really interesting to see basically a Solana dApp marketplace alongside a Google marketplace, because part of our discussion yesterday was around, do I need to keep two phones with me at all times? Do I need my Web 2 device and then my Web 3 device? And they've kind of found that bridge in the middle. What about your experience?
It felt very sleek when I opened it up. It felt very much like the phone experience when opening up a new iPhone, I must say. It was fun to rip open that package.
It's like a little Christmas present.
It was like a little Christmas present. I tried to get a video of it, but I am not so well coordinated.
I'm not social media savvy enough to do an unboxing.
I couldn't get a video of it. I set it up. It was really easy to set up. I set up my seed vault, which was super fun. I didn't get to play around with it much. I am going to download some apps tonight and try it out. But I do have to say, like I mentioned yesterday, I just really love that all my Apple devices connect to each other. And so I look forward to a future where maybe devices like Seeker or devices created by another company, another blockchain, another firm that are crypto native come with interconnected friends to make my life easier.
Yeah, I mean, given this is the second iteration of the phone, I think we're very early days in terms of its overall development. But if we're eventually going to see a Seeker laptop setup or, I don't know, a Seeker storage solution, I think when that universe is built, the device will proliferate in the market a lot more than we're currently seeing at the very, very early days of its development and, I guess, presence in the market.
Well, let's talk about more devices, shall we?
Let's talk about devices. Let's talk about hardware.
If you're just tuning into our programming, you're watching CoinDesk Live. Marissa and I are coming to you from Solana Breakpoint. Our next guest is here with us now, Ledger's Chief Experience Officer, Ian Rogers. Hello.
Hey, how are you guys?
Hi.
We're doing well. How are you doing?
I'm doing great, thank you.
All right, we're having a device conversation. We had the phone here at the desk yesterday. Our phones are actually under the desk. We didn't bring them out because
we're not allowed to bring them on the desk.
We were ill prepared, but I see you have some devices in front of you, so let's do a little bit of a show and tell.
Sure. So you guys are talking about phones, and the reality is that all phones, and including Seeker, were fundamentally meant to share information. That's the architecture and the design. And Ledger was the first and is still the best device designed, ground up really to protect value. So I think what the Seeker guys have done is amazing, and they're really pushing forward the experience and showing that it doesn't need to be clunky to connect, from a browser to a dApp, which is amazing. But architecturally, it's still a phone, and really it's best when paired with, we have a Solana edition Ledger Flex, and so to get security to actually protect value. You really need you need a different level of hardware and architecture. So that's what we build at Ledger, and then we have Ledger Wallet that goes with that for if you think when Ledger started 11 years ago, it was to protect Bitcoin. This one thing, but now it's all of our value. It's our Solana, it's tokenized stocks. It's a yield-bearing savings account for U.S. dollars. It's spending with something like, we have a card, the CL card. It's now easy to load from a bank, where 5 years ago when you tried to load from your bank account, they would flag it as fraud. It really is a bank replacement. So you do all of that on your phone in Ledger Wallet, and then you approve the transactions on your Ledger Signer.
So you've got the Solana Ledger in front of you. What are the key priorities in terms of that partnership bridging into next year?
For us, actually, it's a great question because we're spending a lot of time with the Solana Foundation here. It's really about supporting everything that they want to do in the Solana ecosystem and doing it really well. Talking with the Solana team this week, we're sort of marveling at the fact that we really do have excellent security in the hardware. They have excellent on-chain security. But at that last moment of signing, there's this step where your last step is kind of YOLO, because you can't actually guarantee that what you are signing is what you intend to be signing. That's called blind signing. So when we're doing DeFi things, we do this all the time. You get to that last step and you look at it and it's like some hexadecimal or something. You're like, I guess. I mean, it looked good, but the reality is that a bad actor could be. They could have taken over the operating system on your computer, or put injected code into your browser, or owned the operating system on your phone. And if they do, they can, under the hood, change the receiving address, for example, right? It could be just that simple. So you really need to be able to verify that what you see is what you sign on a device with a secure screen. Just the magic trick of Ledger devices is that it's the same secure chip that's in your credit card or your passport, but that chip is powering the screen itself, right? So you can actually trust what you see on the screen on a Ledger far more than you can on your phone or in your browser, et cetera. So, bringing clear signing to the Solana platform is something we're working with the Solana Foundation on, but also just bringing more functionality, like I said, into Ledger Wallet. In Ledger Wallet, there's a tab called Earn, where you earn yield, bringing more, Solana-based products into that world. We announced something in October when we announced our latest device, the Nano Gen 5. We announced something called Ledger Button, which is to go from your web browser to your Ledger without needing any kind of software in between. No browser wallet, no need for Wallet Connect. You just go connect and it connects to your Ledger. We have that for EVM. We would like to add that to Solana. So working with the foundation on things like that. So those are the kind of things that we're here doing, and really. They're an incredible partner on that.
Talk to us about the future you're working towards. A lot of the conversations that we've been having here and that I've had outside of Solana Breakpoint, you kind of depict this future where we're merging the centralized experience with the decentralized one. And a lot of people like to explain, one day we're going to log into our banking interface and we'll be able to do all of the things we do in the crypto ecosystem there. Where does a hardware device like Ledger fit into this future that we're working together, where everything is kind of blended?
Yeah, what we know is that it's not like security in Web 2 is easy to use and good, right?
Definitely.
So, we all know passwords are a disaster. Anyone of any age knows that. And we're trying to move toward passkeys, and you can put your passkeys with your Ledger. So that's one. You think of that big world. We live in a world of hundreds of millions of crypto people, but there are billions of people who have a password problem, and they are actually safer. You doing passkeys on a Ledger. If your Google account, your X account, et cetera, is better on a Ledger. Think about your banking experience. Your banking experience on your phone is actually pretty bad, because they can't be sure you are who you say you are. So you jump through all these hoops, and then you have all these limitations, that you can only do so much in a day, so much in a month, so much overseas, right? Because they can never be sure that you are who you say you are, right? So really, Ledger would improve the user experience of all of those things. It's rare that you get both better security and better usability in the same package, but with something like passkeys or a financial institution that is securing their application with a Ledger device, you actually do. You get better security, and since you have that better security, the user gets a better experience, because now the bank can know that the person they're talking to is in fact the person who has the PIN code to that device. You know what I mean?
Okay.
And so that, I think it really touches all aspects of anything we do with value going forward.
Question, and curious to hear how you're thinking about this. Another thing we hear a lot is that AI agents are going to be doing our finances, they're going to be trading our crypto, we're not really going to be handling it anymore. Where does Ledger fit in that scenario? Does there always have to be a human present?
Well, I think let's imagine the world that we want to live in, right? Certainly, but first of all, AI will make our lives easier. It will also make hackers' lives easier, right? And it makes it very easy for someone to pretend. If you're watching this at home, how do you know that it's me? You don't, actually. You can't be sure. You do because I'm not asking you for anything, but if I was calling you on Zoom and asking you for money, how would you know it was me? You wouldn't. We already live in that world today. That's not a future dystopian world. So proof becomes, increasingly important. Proof of humanity, also proof of individual. But also, let's say we're going to have AI agents doing more on our behalf. Right? What are you going to do? You're going to give your credit card to that agent, right? I think a much better world, you're going to give your logins to that agent. That creates a pretty big honeypot, and you don't know exactly what happens from that point. Again, imagining the future we want to live in, wouldn't it be much better if we had a device that we controlled, that was highly secure, where the AI could do something on our behalf, but when it came to that moment, it's trying to book you a flight, came to that moment that it needs your Delta login, that you could say, yes, I temporarily grant you the right to my Delta account securely. And then when it says, well, I have found you this flight, would you like to purchase it? You say, yes, I would like to approve the purchase of that flight on my secure screen. That just feels a lot better than, yeah, I gave everything to the AI and now it does everything for me. I think it does a good job. I mean, it balances my checkbook too and it says everything's good. You know what I mean? Like, what world do you want to live in? Like, you want to live in a world where, yes, we have AI agents doing things on our behalf, but ultimately, we are the approvers, right? I mean, even if you're doing something like Claude Code, it's constantly asking you, do I have your permission to do this? We want that. Like, we should keep that. That's a good feature.
I want that, and I just want to let everyone at home know that Ian is real, and if you trust me, I don't know if you do.
But are we real?
Yeah. Are we real? It's really getting a little bit crazy here at the desk.
Proof is going to be an important word in our future. And I think that brokers of trust will become very important as well. We have those in our lives today. It's very difficult to get a driver's license, but it's easy to show one, right? And that will be the future as well, where it might be difficult to sort of prove you are a human and get that soulbound token that says this token represents one human. But it'll be easy for someone to say, that wallet holds a token which I believe that trust broker has told me is a unique human. Like, I think that's the future that we're going into, if that makes sense.
Yeah.
It's also interesting just to see the relationship between, when we talk about trust minimization, but we're also talking about the perception, the sensation of trust when it comes to the devices that we interact with, and both are kind of needed in this respect. So as we kind of go into the future, how do you see Ledger sort of embedding that functionality into the device? Is it more so that, all these logins that we see across Web 2 are suddenly available on this device, or are we just talking about a total overhaul of the system and prepping the hardware for that?
Well, I think ideally it would be an overhaul of the system in a couple of directions. Because first of all, again, remember that we have phones that were fundamentally built. I mean, they're incredible devices. I'm not slagging them at all, but they were built to share information, play games. This is what they were optimized for. Have lots of different apps running at once. Like this is what they were built for. So, first of all, we need, a separate device for security. Just like you have a separate device for health, you have a separate. So I think that there is, if I gave you the task of protecting $1 billion in gold bars inside of a building, I wouldn't also put a gym and a kindergarten and a grocery store and a nightclub in that building, right? We would, you would say, please don't. And we would keep those things separate. They have different levels and needs of security. So I think that might, you could imagine that is more at the operating system level though than at the device level. So you could imagine a device with two operating systems. One is a secure operating system, and one is the operating system that you can play Candy Crush on. And there's more than one way to kind of segregate those things. I think it goes a level further though. To where, again, I think that, what makes crypto? It's self-custody. If not self-custody, why crypto, right? What the amazing thing about Bitcoin is permissionless money, right? And so self-custody is part and parcel. Even if, you are like keeping with a custodian, that custodian still has, custody of a permissionless asset, And so that we need though with other things in our lives, our identity, our preferences. The fact that our preferences are locked behind thousands of websites right now where you put in a username and password that's relatively easy, difficult to get into and easy to steal is not the right setup. A world where users own their own preferences and it's very user-centric, and then users can federate their personal identifiable information, et cetera, to third parties when they want to. that's actually a better world to live in. So that's why I think the ideal thing is an overhaul where you have you have security, things that are purpose-built for security. In any industrial transformation, you have an unbundling and a rebundling, right? We unbundled the compact disc into 99-cent downloads, and we rebundled it into Spotify, right? So you always get these unbundling. So right now, we've got our phone, and we've got our ledger. That's an unbundling. Again, you could imagine a rebundling, but not really into the same operating system. It doesn't make sense, right? So you would keep those things separate. And then I think we also need to, it's not me making it up, right? It's Google, Microsoft, Apple are all moving toward passkeys. This is a model where you have more user-owned preferences. And we need to move into that.
Ian, we got to leave it there. Thank you so much for joining us at the desk. It was such a pleasure speaking with you.
Thanks for having me.
All right, that was Ian Rogers, Chief Experience Officer at Ledger. We are going to take a quick break. We'll be right back.
From a small trading port to one of Asia's economic tigers, Hong Kong built a reputation on something rare: the ability to take fast-moving markets and give them structure. For half a century, global capital came here for one reason: Hong Kong knew how to turn frontier markets into functioning ones. Whether it was the first wave of Asian IPOs, the rise of multinational deal-making in the 90s, or the deep liquidity that defined the 2000s, Hong Kong made complexity investable. And now, the frontier has shifted again. Internet capital markets, a new system of finance being built at internet speed. And Hong Kong is once again doing what it does best: designing rules that invite innovation. This February, Solana Accelerate lands in Hong Kong, side by side with Consensus Hong Kong. We will bring founders, institutions, and policymakers into the same room, the same energy, the same opportunity, because Hong Kong turns experiments into industries. To get your tickets, head to solana.com/events. Solana Accelerate Hong Kong. See you soon.
I'm Jen Sanasi, and I am here with my co-host Marissa True. We were coming to you from a jam-packed Solana Breakpoint in Abu Dhabi. We are now joined at the desk by Solana Policy Institute President Kristen Smith. Hello.
Good afternoon. It's great to be here.
Yeah, great to have you here. We haven't really talked a lot about regulation today. We have had a few conversations that have touched on regulation, but excited to kind of dive into what's happening as we head to the end of 2025. A really hot topic is market structure.
Yes.
As you know.
Yes.
Feels like it's getting a little messy. Tell us, you're based in DC. I know you're having a lot of conversations with industry leaders as well as policymakers. What's going on?
Yeah, well, listen, first of all, legislation is a really hard thing to do. And if you look back at 2025, we've had such victories, including the signing of the Genius Act. So Congress has been working very hard, and they're continuing to work very hard on the market structure issue. I think if you look at this issue, it is a bipartisan issue. We have folks on both sides of the aisle that are involved in the process and want to see it get done. And market structure is actually quite more complex than stablecoin. They're dealing with token classification, token fundraising, tokenization of securities, and spot market regulation, DeFi protections, preemption, the list goes on. And it's really important that we get this done right. And so I think, the White House, the Senate, the House is continuing to step in and be helpful as well. Everyone's working on it. But I do think it's more important to get it right than get it done quickly. And I think that it will probably be a process that goes into 2026. And I think that's just fine. It is a bipartisan issue, and I think we've got a lot of time to get it done right.
Something that we've heard a lot is that there's this real education needed, especially when it comes to DeFi and some of the other topics that you mentioned there. Do you see a future where we get market structure, but some of the more complex challenges between the two parties and with education are left out and addressed at a later time?
Yeah, I think it's a little bit hard to see how it goes. I do think one interesting thing right now is if you look at the regulatory agencies, the SEC and the CFTC, for many years in the prior administration, they were taking a much different interpretation of how existing laws apply, and that's why we had all of the litigation. But with this administration, you have a very sort of aligned set of regulators in that space. I mean, if you look at Chair Atkins at the SEC, he thinks all the markets are coming on chain, which is amazing. And he's got a lot of power to address those issues. So if we can take maybe token classification, token fundraising, and tokenization of securities off the table, I think that would narrow what Congress needs to do. But I don't think we're there yet. I think Congress right now is focused on all of the issues, and I think that they are continuing to have conversations or meetings with the White House just yesterday on this, and so there's a lot of work going on. I think we need to let it play out. I've worked on Capitol Hill as a staffer for 10 years. These things do not happen overnight. They take years and years and years, and that's okay. That's how you end up with a good product, and so I think we need to let it run its course and let the negotiations continue.
So when you look at the way the US is basically exploring this regulatory process, and then you compare it with markets like UAE that is famously progressive, what are some of the, I guess, like the varying practices that you witness here that you think could be applied in the US a little bit better?
Well, I think the US has caught up to jurisdictions like the UAE, right? I mean, I think the problem we had prior to this past year with the new administration and the new Congress is there wasn't a desire to have crypto be located in the US. That has changed. We want the US to be the crypto capital of the world, and I think that is the attitude that the UAE has taken for a long time as well. So I think this global competition is incredibly healthy and incredibly important, and I think now that the US has realized, like, hey, we need to figure out how to make this workable here. I think that's the biggest lesson that we've been able to take from other places around the globe like the UAE.
So is a core catalyst there basically just global competition and basically wanting to be a crypto capital or at least a first mover in this industry?
Yeah, well, I think, listen, like the US right now has the strongest capital markets in the world, and I think that Solana and, is potentially the future rails of the US capital markets, right? And so we want the US to continue to hold that position, and I think that updating our laws to make it a place where developers want to be, where jobs are built, and where we want mining to be happening in the US. We want staking to happen in the US. Like, we want the US to be a participant for economic reasons, but also because it's just the technology that is going to drive the systems where we've traditionally been competitive.
Can you tell us a little bit about the Solana Policy Institute itself? How are you engaging with folks in DC?
Yeah, well, we've been around since the middle of the spring last year, so we're relatively new. But one of our primary objectives is to teach policymakers about Solana. And so we've had a lot of events and a lot of one-on-one meetings to talk about Solana. But we're also working on some specific initiatives. There's a lot that needs to be done on the tax front, especially around staking. Obviously, we need to make sure that market structure legislation is something that works for the Solana ecosystem. And then, the SEC, as I mentioned, is doing a lot with their Project Crypto. And I think that, that is something that we've filed many comments on. And so it's been a lot of fun. We have a small team, but I think we're having a pretty good impact on behalf of the Solana community.
Where's the biggest education gap?
Oh, boy. There's a lot of education. Well, listen, there's new people that come into government all the time, right? And so I think, twofold. First, it's the new people coming in that are new to crypto. But a lot of it is, if you look at the regulators, they're not allowed, even to this day, to touch and hold and play with crypto assets. And that's a problem, because you need people to understand what a wallet is and how transactions work. And, we want them to be using DeFi. And so that's something that we need to get addressed at the government level. And so a lot of it is like, how can you convey these sort of concepts to people who aren't allowed to use it? And that's probably the biggest challenge.
And it sounds like the education is working.
It's working. It's never ending, but it's working. And I think that, if you look at the president's executive order, if you look at the Genius Act, if you look at Project Crypto, the repeal of SAB 121, I mean, there's so many amazing things that have happened in such a short amount of time. I think if we had been sitting down having this conversation a year ago, we would not have predicted the success. And so I think it's important to acknowledge the path ahead of us and the items that we need to do, but we really have to remember, like, we have come so incredibly far in such a short amount of time, and we should remember to celebrate that as well.
What happens if market structure doesn't pass?
Well, I think that the regulators can do a lot. They can't do everything, but there are a lot of pieces that they have the authority to do today, specifically around token classification and token fundraising, and also the tokenization of securities. So I think that those pieces will continue to move forward. Listen, I think passing good market structure legislation is going to be very good for the crypto ecosystem, but we just have to realize it's a process that can take time, and that's okay. That's just sort of how it works. Bills don't happen in a 1 or 2 year cycle. Like they take anywhere between 5 and 10 years, and we're well within that window right now. And so I think that we just need to continue to do the education, to bring the ideas to the table, move the ball forward, and I think we'll eventually land in a place that's good for crypto, good for users of crypto, and good for the United States competitiveness.
Kristen, thanks so much for joining us at the desk. It was a pleasure.
Yeah, thanks for having me.
Thank you. That was Solana Policy Institute President Kristen Smith. We're going to take a quick break. We'll be right back.
From a small trading port to one of Asia's economic tigers, Hong Kong built a reputation on something rare: the ability to take fast-moving markets and give them structure. For half a century, global capital came here for one reason: Hong Kong knew how to turn frontier markets into functioning ones. Whether it was the first wave of Asian IPOs, the rise of multinational deal-making in the 90s, or the deep liquidity that defined the 2000s, Hong Kong made complexity investable. And now, the frontier has shifted again. Internet capital markets, a new system of finance being built at internet speed. And Hong Kong is once again doing what it does best: designing rules that invite innovation. This February, Solana Accelerate lands in Hong Kong, side by side with Consensus Hong Kong. We will bring founders, institutions, and policymakers into the same room, the same energy, the same opportunity, because Hong Kong turns experiments into industries. To get your tickets, head to solana.com/events. Solana Accelerate Hong Kong. See you soon.
Hey everyone, welcome back to CoinDesk Live. We are coming to you from Solana Breakpoint, where there is a robot tap dancing behind the camera right now. I know you can't see it, but that is a little bit of an incentive for you to stick around, because he might be at the desk a little later on. Our next guest joins us now. We have Mert Mumtaz. Mert is the CEO of Helios. Helios is a core infrastructure provider offering API and development tools, effectively acting as the central nervous system for many builders on the Solana network. Mert, great to see you.
Thanks for having me. That was quite the introduction.
Well, thanks. It's all about you, so, thanks for being great.
Of course.
All right. Talk to us about what you've been up to the last 2 days. You have been, a really core part of the Solana ecosystem for a while. What's Breakpoint been like for you?
Excellent. I mean, I'm in the UAE full time, so it's been fun to not be jet lagged and actually have some energy. I think I'm super impressed with the quality of announcements. So things like perps taxes, which Solana has lacked, now are being tackled. Much more institutional capital. So JP Morgan just did a bond transaction exclusively on Solana with Galaxy. Galaxy itself is releasing a new token liquidity fund similar to BlackRock's Build. I don't know how to pronounce that. Yeah. And so Kalshi obviously announced their tokenization of prediction markets. So, there was this conception that Solana was predominantly for memes, but clearly now and things like, listing XRP and Zcash and Monad and other L1s as well, like the internet capital markets thing is finally actually happening.
So Solana's arms are basically reaching far and wide, and I know that Helios recently launched Orbs, which is the blockchain explorer on Solana. So tell us a little bit more about that and what that actually means in application to the broader ecosystem.
Sure. So this is an interesting one, because if you've been in crypto for any meaningful amount of time, you'll note that block explorers like Etherscan and SolScan are relatively unimaginative. They're basically gigantic applications for receipts. Like you do a transaction with your wallet, and then maybe you'll get a receipt on the Explorer. And I think that's pretty boring. I haven't seen anything interesting there for many years. And I think for internet capital markets to be a thing, yes, you need the assets, you need the liquidity, you need the trading quality, but you also need this UI for the capital markets, right? You need to see, one of the core things that we say blockchains are good for is transparency. But what good is transparency if you can't actually understand the language it's speaking, right? If somebody's transparently speaking to me in Chinese, it doesn't matter, I don't speak Chinese. And it's the same thing with blockchains. So with an Explorer, we can actually take that data and process it such that any user can understand, okay, this is how the markets are actually doing, here's my holdings, here is the details around this DeFi application and its interactions, here's my taxes. And so with Orb, we're looking to rethink block explorers from first principles and finally enter like the internet age as opposed to this weird receipt hosting age.
So we're sort of looking at what was essentially a dashboard and then trying to find ways to actually give users direct insights based off of what that data is providing.
Yes. And there's no reason why you should, use a block explorer for the past and then something like a DEX screener for the present and then another trading app to execute. It's just nonsensical that you need to use 4 different apps to do one thing, right? So why not unify and reduce some of this friction so we can finally onboard people onto the industry?
And so you're also looking at, we described Helios earlier as the central nervous system of the developer ecosystem here on Solana. So when we look at developers as they are today, and clearly they've evolved a lot since Solana was originally launched, what are some of the opportunities that you really see them gunning for at the moment? And also, what are some of the pitfalls they still keep finding themselves trapped in?
Right, so when we started in Solana development, this was 2021, and there was a meme about Solana having only 75 developers. And VCs used to laugh at us because our market was tiny and there was no developers on Solana. But of course, you want to skate to where the puck is going, not where it is, or you're always going to be a laggard. You're always going to be behind the ball. And with Solana today, we've overcome a lot of problems. So one of the, obviously people used to talk about, the reliability issues and the chain going down. They used to talk about, the read layer, which basically just means getting data fast and reliably. And a lot of those fundamental things that are abstracted from users generally have gotten much better, and you'll be able to notice as a user in the apps you interact with, they're much faster. You don't see any downtime anymore in over 2 years now. And so the little kinks have really been worked out. And so now it's about abstraction, right? It's about, okay, now that we have this great data infrastructure, this developer tooling, how do we actually compose? So for example, one great example is Kalshi, when they're tokenizing their prediction markets, and so such that any application on Solana can tap into that API via this team called dflow, which is an aggregator on Solana, and add prediction markets just by tapping into the blockchain, no matter any whatever UI they are. It can be Phantom Wallet, it can be Orb the Explorer, it can be Jupiter, right? And so you can get markets in every screen that you want markets in, right? So you can have 10,000 markets in your pocket in a sense. And so that's the new phase of this, which is abstraction and accessibility and increasing it to all the world's users.
Where does privacy come into the picture here? I know that you are very vocal about privacy. You are a big supporter of Zcash. When we think about at the developer level, are we thinking about programmable privacy on some of the dApps that we're seeing come to fruition in the ecosystem?
Yes, so there's 2 sorts of privacy that I think of in crypto. There's obviously the Solana and smart contract version where you want private trading, private payments and interactions. And then you have Zcash, which is basically Bitcoin, but secret, encrypted gold in some sense, right? So these are 2 different things. In the matter of Solana, privacy is, people confuse this and they think privacy is about secrecy, but privacy is about selectively revealing oneself to the world depending on what they want to disclose, right? For example, with your pictures, you obviously do not want all your pictures to be seen to the world. You obviously want some of them to be encrypted, and you'll post some of them on social media. It's the exact same thing with your transactions, right? There's no sense why you would encrypt your files, your photos, your food recipes even, your private chats, but your money is for some reason not encrypted, right? Where's the sense in this? And so people should at least have the choice to be look, these are the transactions I'm willing to reveal to the world. Maybe they're merchant payments for buying a burrito or something. But for these things, maybe they're large-size trades, or maybe they're certain types of payments, or maybe they're votes, right? Think of a democracy, right? Like you don't broadcast to the world, hey, I'm voting for Biden or Trump. The results are public once you voted, but the intent that you cast the vote with is private. Otherwise, you would get bullied, right? Somebody would be like, hey, why are you voting this way? And it's the same thing with Solana and private transactions.
But why was privacy such a core theme of this year relative to previous years? Because surely it's always been an issue.
That's a great question. I think one of the problems in the past was that crypto was just not legitimized, right? People were just scared, especially with a super unfriendly SEC administration where you would just be sued for even releasing a token or making money. And so when you bring privacy into that, privacy is like this fringe legal thing in some sense, not just with money, but with private messages, and you've probably seen what's happening in Europe with like chat control. And so that was a very long shot to have like, hey, while crypto is not even legit, let's also make private crypto legit, right? However, now what's changed, of course, is the new SEC is extremely friendly to crypto. They want to put all markets on chain. Trump has released a meme coin on Solana, so has Melania, so has all these different actors. And it's like, look, while we're legalizing some questionable things, people's right to individual privacy and defense from financial surveillance should also be considered here.
We got to wrap up, but I just want to ask you one quick question. I was speaking to Zuko Wilcox recently. I know you and him were on a panel at Midnight Summit just last month. And he was talking about the risk that quantum poses if we don't start encrypting our actions online now. How are you thinking about the introduction of quantum into the crypto ecosystem, and how can we start preparing ourselves?
Yes, this is a good question that everybody, I think, is too overconfident on in terms of the answers. On one camp, you'll have people thinking, hey, look, it'll be 40 years before this comes, and then some people will say it's coming in like 5 years. The thing with quantum is like it's one of those things where you want to keep secret as long as possible if you're the attacker, because you don't want people to know you're exploiting the system. So if that's the premise that you're taking, and you're storing trillions of dollars in value like Bitcoin, you need to be ahead of this very fast. Like there's no real reason why you shouldn't be defending against it. Nation states are already doing this, right? There's these attack types called harvest now, decrypt later, where like you can actually just go on the internet right now, take these encrypted pieces of data that you can't make sense of today, but you'll be able to decrypt in like whenever quantum computers come. And so with crypto, you need to be ahead of this. And so like one of the biggest reasons why I'm a huge fan of Zcash and Solana is they're super pragmatic. And so Zcash has solutions for this coming already, and the privacy is sound. And then with Solana, we're already experimenting with quantum-proof signature schemes. And so when the time comes, and actually much before that, you combine that with how fast Solana ships, those two ecosystems will be extremely ready. I do have concerns for Bitcoin, however. I think they'll be fine, but I do think they need to be a little more aggressive in the defense against this.
Okay, we really got to go. I'm probably going to get in trouble for asking this, but what are your concerns when it comes to quantum and Bitcoin?
Well, so quantum it basically breaks all the cryptographic schemes that crypto relies on, right? So, and if Bitcoin is affected in any way, this is not just a Bitcoin thing, by the way, right? Like assuming Bitcoin gets attacked, all of crypto goes into a nuclear winter for a very long time, right? Crypto native people will be like, oh, whatever, they just had a different scheme for Bitcoin, that's why it was affected. But to anybody with who's not like a developer in the system, they're going to be like, oh, I don't trust crypto anymore. And so now the industry's set back by 10 years at least, right? And so, if you're a Bitcoin person, just please work on this as soon as possible. I understand, people might be exaggerating how soon it's coming and all these different things. That's fine, but at least have the plan and be ready to execute it for if there's a 0 day or anything like this.
Expect the best, prepare for the worst.
Exactly.
All right, on that note, Mert, we got to let you go. Thanks so much for joining us at the desk.
Of course. Thanks for having me.
That was Helios CEO Mert Mumtaz. We are going to take a quick break. When we come back, more from Solana Breakpoint.
From a small trading port to one of Asia's economic tigers, Hong Kong built a reputation on something rare: the ability to take fast-moving markets and give them structure. For half a century, global capital came here for one reason: Hong Kong knew how to turn frontier markets into functioning ones. Whether it was the first wave of Asian IPOs, the rise of multinational deal-making in the 90s, or the deep liquidity that defined the 2000s, Hong Kong made complexity investable. And now, the frontier has shifted again. Internet capital markets, a new system of finance being built at internet speed. And Hong Kong is once again doing what it does best: designing rules that invite innovation. This February, Solana Accelerate lands in Hong Kong, side by side with Consensus Hong Kong. We will bring founders, institutions, and policymakers into the same room, the same energy, the same opportunity, because Hong Kong turns experiments into industries. To get your tickets, head to solana.com/events. Solana Accelerate Hong Kong. See you soon.
Welcome back to CoinDesk Live. We're coming to you from Solana Breakpoint in Abu Dhabi. Our next guest is the CEO and co-founder of Orange Cap Games, Spencer Gordon Sand, joins us now. Hey, Spencer.
Hi, guys. Thank you so much for having me.
Thanks for being here. Now, let's talk about it. We haven't actually talked a lot about the culture side of things here at the desk, and so I'm really excited to jump into it. I know that Orange Cap Games recently acquired Moonbird's NFT collection on an IP play, right? But just talk to us about what that means.
Yeah, so I think if you look at crypto, right, we had a very long period of time, 2017 cycle, which was really about who had the better tech, marginal tech adoption, and it was growing at a very fast rate. And as many things do, I think it really plateaued, right? We don't see as much new marginal technological innovation. A lot of L2s are as fast as L1s. Like, this competitive moat of my technology is better has really stalled in a pretty meaningful way. Maybe it comes back, maybe it doesn't. But when that happens, I don't think the industry is over, right? I think this actually is very common in tech adoption curves. And what we see is when technology is improving at a slower rate, it's distribution that matters. And what is the strongest thing about distribution is intellectual property. Intellectual property drives a lot of distribution in the Web 2 space, in a lot of the traditional industries. This is why we see, major IPs like K-pop being such a big avenue for distribution of different things like products, like new stuff, right? And so it makes sense that as crypto grapples with this, maybe the tech improvement is slowing down, the importance and the forefrontness of intellectual property and of distribution growth is greater.
So essentially what we're looking at is this notion of bringing IP to life. But, we've dabbled with NFTs over the last few years. We've seen that boom and bust cycle. Some are arguing that it's due a resurgence. Some are arguing that they are dead forever. What's your stance on it? And what's actually going to take to revive IP in this Web3 domain?
Yeah, so look, there's few people in the world who've traded more NFTs than I have. Like, this is something that I care very passionately about. And 2021 cycle was crazy, 2021, 22. I don't think we're getting back to that level of euphoria, but I also don't think that means it's over and it's dead, right? I think we saw this in Web 2, which was the .com bubble had this crazy euphoria. B2B SaaS.com IPO'd on just a domain name. Like, we don't want to go back there, right? But after the tide came out, we saw many companies collapse. The ones that survived, that's where Google, that's where Facebook, that's where many of the major tech companies that really drive the world today come from, is the resurgence after. And it took a very long time. It took methodical growth. It took real companies happening. I think for us, a thing that we see is you have to take your intellectual property and then what do you do with it, right? One of the main things that happened in NFTs was royalties went away. And royalties on the trading of NFTs was the main revenue source for a lot of companies, right? But that's not the only way that you can monetize IP. There's plenty of other ways. So at Orange Cap Games, we focus on making physical collectibles. Why does that matter to us? It serves two goals. Goal one is get more distribution. A lot of the ways that IP get out into the world outside of crypto is by being on someone's shelf, is by being in someone's collection, is by being on the shelf of a store, right? This physical presence is a great way for discovery and a great way for distribution of new IPs, of old IPs, of existing IPs, et cetera. And secondly, it's a great way for monetization, right? As a company, you need to make money. Companies cost money to run. And so you need to make money in order to keep your lights on. This is a crazy concept. A lot of people in crypto maybe are still grappling with this. But we feel very fundamentally that, look, intellectual property is really important. The best way to monetize intellectual property right now is through collectibles, through trading cards, through figurines. We've seen the growth of PopMart is absolutely parabolic. I think they're doing $4 billion in revenue this year. One Piece, famous anime, their biggest monetization pipeline is their trading card game. I think they're doing, at peak they were doing about $1 billion a month in revenue off their trading card game. When you look, collectibles have really had this crazy resurgence, and so you see this intersection of intellectual property, distribution, and then also revenue generation. It makes so much sense to try and own that as a company within crypto, because I believe firmly that especially if there's an upcoming bear market, whether there is or not, doesn't matter. This is actually a thing that can help sustain, grow, and thrive as not only a company, but an IP and your relevancy within the industry.
I think you're absolutely right. We're not going back to the world of $69 million NFTs. And I hear you when you say, IP is introduced to people in maybe different ways than we've seen the crypto industry try to bring into life in the past. But you talk about being on the shelves, you talk about bringing this IP into the physical world. How do you compete with IP giants like Disney and Warner Brothers, who have these established infrastructures around the intellectual property, and they also own the shelf space? I mean, when we saw Pudgy Penguins in Walmart, that was such a success for Pudgy. So how do you think about bringing this crypto native IP into the physical world and reintroducing and building a brand amongst folks who know nothing about what happened previously?
Absolutely, I think it's a stepwise approach. So, for us, we're distributed, so we make trading cards and we make physical blind box figurines, kind of like PopMart and kind of like Pokemon cards, think about it. Currently, we're distributed by the largest hobby distributors in North America, the largest Funko Pop distributors in North America, and the largest Magic the Gathering trading card distributors in North America. We're on the shelves of thousands of hobby stores throughout. And we're growing as a presence stepwise. I think what you have to think is, what is the long-term vision, right? Do you believe that these incumbents, the Disneys of the world, are impossible to unseat? I think no. I have a firm belief that the next wave of IPs are digitally native. The next wave of IPs are crypto native even, right? And when you look, I think this is an important thing. When was the last time you heard of a new superhero? Probably never,
remember.
Right? Basically, every superhero comes from the 1940s and the 1950s during the golden age of comics. To me, the golden age of IP in crypto was the 21 to 22 NFT bull cycle. This is why we acquired Moonbirds as a brand, as an IP, because I don't think that you can recreate the moment that happened then, right? But now it's saying, okay, well, if you believe that digitally native IP matters, if you believe that crypto native IP is an important flavor of digitally native IP, well, there's only a handful of them that really matter, right? You mentioned Pudgy. Pudgy did an incredible job of beginning to prove out this thesis. They went collectibles, they went plushies. We make Vibes, which is the Pudgy Penguins trading card game. So we're very familiar with that IP and how it's grown, et cetera. For us, it's how do we grow with really high quality products and make innovations in different industries. So for example, our trading card products are in all full art cards. We also launched with a full digital and physical game. One Piece doesn't have a physical game. It doesn't have a digital game, only has a physical game. Disney's Lorcana, which is their trading card game they just launched, does not have a digital game. It only has a physical game. Flesh and Blood, which is the other most successful one that launched, does not have a digital game. It only has a physical game. And so for us, we said, hey, we believe so much of the value of this IP and the growth of this IP is in its digital nature that, can we compete with these companies by having the ability for you to go home, play the game on your online computer, then go play it in person, collect the cards. And that's been very successful. The highest selling card that we've manufactured sold for $12,500 at auction at Golden Auctions. That's about the same as the original printing of Charizard would sell for. So it's not a if, how could we do these things? We're actually doing them and it's already happening.
Spencer, thanks so much for joining us at the desk. It was a pleasure.
Awesome. Well, thank you for having me.
That was Spencer Gordon-Sand. He is the CEO and co-founder of Orange Cap Games. We're going to take a quick break. We'll be back and we might have a robot at the desk, so stay tuned.
From a small trading port to one of Asia's economic tigers, Hong Kong built a reputation on something rare: the ability to take fast-moving markets and give them structure. For half a century, global capital came here for one reason: Hong Kong knew how to turn frontier markets into functioning ones. Whether it was the first wave of Asian IPOs, the rise of multinational deal-making in the 90s, or the deep liquidity that defined the 2000s, Hong Kong made complexity investable. And now, the frontier has shifted again. Internet capital markets, a new system of finance being built at internet speed. And Hong Kong is once again doing what it does best: designing rules that invite innovation. This February, Solana Accelerate lands in Hong Kong, side by side with Consensus Hong Kong. We will bring founders, institutions, and policymakers into the same room, the same energy, the same opportunity, because Hong Kong turns experiments into industries. To get your tickets, head to solana.com/events. Solana Accelerate Hong Kong. See you soon.
Welcome back to CoinDesk Live. If you're just joining us, we're coming to you from Abu Dhabi. We are at Solana Breakpoint, where so many things are happening all around us, and I'm really excited to bring you this little experience. We have Michael Cho, who's the co-founder of BitRobot, and he's joined by a very special guest, Booster K1. Michael, Booster, welcome.
Thanks for having us.
Well, thanks for being here. We have this, do we call it a robot?
Yeah, it's
Robot?
a humanoid, like a small humanoid robot.
A small
yes.
humanoid. He was kind of like tap dancing here, which was super fun.
Yep.
Talk to us a little bit about what we're seeing. Give us an introduction to BitRobot and tell me about what's going on your hat.
Okay, Mark, okay. So BitRobot, we are trying to build the world's open robotics lab, basically using crypto incentives to gather resources to advance robotics AI research. To date, we have research collaboration with labs from universities like Stanford, UC Berkeley, as well as commercial contracts with some of the largest frontier labs. So that's the main thing we do, but on the fun side of things, we do robotic entertainment. We over here at Breakpoint, we actually have a humanoid fight. So we don't fight with this little guy because this is a bit small, but with the bigger bots, we actually do real humanoid fights.
I hope that while we're talking, we can see the humanoid on the camera, so our audience at home can see what he's doing, because it's quite fun. And so while we figure that out, we'll get back to it.
So tell us a little bit more about how these humanoids are controlled, and also, the fights that are taking place outside in the arena. How are you pitting robots against each other, and how does the game work?
Yeah. Well, so right now, all these humanoid, when it comes to fighting, they're actually all human controlled. So there's a human behind it, using just a game controller. Think of it as playing a Street Fighter video game, except this happened in the real world. So a lot more messy, but that's where it's fun. And so right now, the technology is at a stage where they are not really good enough to be fully autonomous. But honestly, we're within months, we're having something that is autonomous, and you can have human player playing versus an AI, and then with humanoid fighting.
So when we talk about these robots being autonomous, what do we materially mean in the way that they orient through space?
Yeah, so it's actually right now, like the reason why we are like so much research going into it is because it's not solved. It turns out actually what's easy for AI is actually very difficult for humans, but vice versa as well. So like, for example, you and me, when we humans move around in the physical space, we don't even think about that. But that turns out to be extremely difficult for AI to do, right? So we have things like ChatGPT and whatnot, which is crazy. But then these robots, as you can see, they can barely walk, they fall down, trip over themselves. So there's a lot of research, actually, bottlenecks that still exist. And part of the reason why BitRobot exists as a project is to actually use crypto incentive to, as a first step, gather a lot of the data that actually you will need to train up these models.
So are we saying that one of the challenges here for humanoid robots is proprioception and the ability to orient through space through just bodily awareness and spatial awareness? Is that the challenge?
Yeah, absolutely. Yeah. So for example, like if you look at this cap that I'm wearing, so this is one of the projects that is within BitRobot. So BitRobot is arranged in different subnets. So this will be one of the subnet. It's called RoboCap. So as you can see, it's got a bunch of cameras. It's actually got 6 cameras. So if I press record, it will be 6 cameras recording all at once. So these are called egocentric videos. Now, they are important because it turns out you can actually train an AI model to learn from humans, right? So it will look at, obviously the video, you can see what your hand, what your whole body is doing. And there are now AI techniques where you can actually infer what a human do and try to transpose them to a robot like this.
Now, if we look at how quickly large language models like ChatGPT have accelerated, I imagine we're going to see the same thing when it comes to robots like the one that we're seeing here. I mean, is the timeline for the robots to learn spatial awareness and to start, moving through space and interacting like humans, maybe shorter than we would expect?
Depends on who you ask. My personal opinion is that it's going to take a lot longer than people expect.
How long?
Like if you're talking about humanoids in your home helping you do dishes and all that, in my view, it's at least a decade.
So at least in time for us to get old, and then they'll probably be ready.
Yes. I think it's at least a decade, like 10 years. But of course, every year you have see like some changes to improvements. Like I would say, up till a year ago, you won't be able to get a robot like this that's kind of doing dancing moves, but now you have it. But I would say for things that seem very intuitive to human beings, it's actually extremely hard. And the reason why that's hard, right, is partially, like I said, is the bottleneck in data, right? If you think about ChatGPT, right, all these LLM models, they are basically trained from huge amount of data from the internet. But if you think about the internet, these are basically output of humans' conscious thoughts, right? Your text, images, and videos. We can record it down, and that's why they exist. And turns out the whole internet, you can actually train a big model out of it. Now, the way human beings we do, like we move around the physical world, I can only show you, like for example, the way I'm waving my arm, I can only show you, but I can't record it down, like, for example, every second, the exact degree I'm moving. So these are called action labels. And because we can only show, we can't record, that's why this data just doesn't exist. And that's why, like, even though we have the algorithm in theory to build the embodied AI model, but then because the data doesn't exist, now there's actually a big opportunity, which is why Big Robot exists, to try to use crypto incentive to get this action label data.
So let's say we solve for that data bottleneck. What are the key characteristics we need to nail down for us to consider it ready to, let's say, deploy into a home?
Yeah, I would say, safety is a huge one. So right now we have projects, in fact, some of these are paid commercial projects, again, from large frontier labs, where we literally deploy some of these humanoids into actual people's homes. And like I said, they fall over each other, and when they fall, it's a pretty heavy thing, and we've broken a few floor tiles. Right? So it's definitely something you don't want your kids or your elderly parents to be around. So like the final 1-2% may actually take a decade, but I would say people would expect the last 1-2% to be solved. And that's why, in my view, it's going to take it's just like kind of with self-driving. It's like we have self-driving in 2015, and yet today we still don't have self-driving, right? At least, widely available. And safety is a huge part of it. And so, yeah.
A decade from now, then, once some of these challenges are sorted out and there's enough data to train them, what's that vision you're working towards? What does that future look like?
Yeah, so so we work with some of the top researchers in the world, again, from these big labs and top universities. They are really talented, but they are so starved of data, right? This is the raw ingredient they need to do their best work. And so it turns out like a lot of these data just need to be collected from different environments. And I think crypto is great at that, right? Basically crowdsourcing the collection of this data. Like for example, if you want to build a robot that can help you fry an egg in your home, you actually want to collect data from thousands of kitchens, right? And how do you get robots into thousands of kitchens? Like one way to do it is to crowdsource it using, in a permissionless way. And that's what Big Robot is working towards.
All right, we are going to wrap it there. But now, the robot that we've been talking about all this time, that our audience at home, I believe, has not yet seen, is going to get a special treat.
Okay.
Here we go.
Okay. Dun, 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 dun. I think it's supposed to be a Michael Jackson thing. Yeah, whatever it just did there is actually very, very hard to do well. Yeah, to balance like that. Like I said, half a year ago, this is not possible. Yeah. That's it. That's the limitation of what it can do now, but it's
better than I can dance, so that's saying something.
Yeah, likewise. Yeah.
All right, that was enough. It looked like that robot was trained off of my dance moves. We are going to take a quick break. We'll be right back.
From a small trading port to one of Asia's economic tigers, Hong Kong built a reputation on something rare: the ability to take fast-moving markets and give them structure. For half a century, global capital came here for one reason: Hong Kong knew how to turn frontier markets into functioning ones. Whether it was the first wave of Asian IPOs, the rise of multinational deal-making in the 90s, or the deep liquidity that defined the 2000s, Hong Kong made complexity investable. And now, the frontier has shifted again. Internet capital markets, a new system of finance being built at internet speed. And Hong Kong is once again doing what it does best: designing rules that invite innovation. This February, Solana Accelerate lands in Hong Kong, side by side with Consensus Hong Kong. We will bring founders, institutions, and policymakers into the same room, the same energy, the same opportunity, because Hong Kong turns experiments into industries. To get your tickets, head to solana.com/events. Solana Accelerate Hong Kong. See you soon.
Welcome back to CoinDesk Live. Our next guest is Neil Chatterjee. He is the CEO and co-founder of Andrena. And Don, hello.
Hello. Thanks so much for having me, guys.
Thanks for being here. We've been talking a lot about DePIN lately. It is something that, Marissa and I were talking about yesterday, was in the spotlight and then was kind of pushed to the back burner as we talked about institutional adoption and all of this kind of boring stuff. Talk to us about the state of DePIN we're in from your perspective.
So I think DePIN is kind of evolving in front of our eyes, and we're seeing that the category of the person that kind of likes to get involved in DePIN, what they're looking for is something that's a little bit more stable, a little bit more predictable, right? If you're going to spend money on a GPU or a data center or even a black box, you want to know that your time and your energy is going to come back towards you in a way that's predictable. And it's kind of like a no-brainer in hindsight when you look at this, because the category for this stuff is called digital infrastructure, right? PE companies invest in towers, they invest in data centers, they invest in telecom companies, fiber companies. And these are the types of returns that you have to kind of get. It's got to be predictable cash flows. And so I think we're in the middle of like a really big transition when DePIN deployers, they're not looking to deploy hardware and speculate, maybe I'll get my money back, maybe I'll get 100x. What they really want to know is that their time and effort is going to be rewarded in just a predictable way. And I think we're seeing like a massive transition in front of us. Big one is like USD AI, right? Like these guys are now providing stable levels of returns for folks that are looking to deploy GPUs in there. So it's just a fundamental shift that we're seeing.
For folks who are watching at home and think like, the infrastructure around me kind of works fine. Why do I need a decentralized infrastructure? What's your answer to them? Like, help us dig a little bit deeper into how we interact with our infrastructure and maybe how we've been trained to think things should go.
Yeah, the simplest answer is just look at it from the perspective of your home internet bill, right? In my home in Princeton, New Jersey, right, I have one internet provider that's available as an option to me, and I'm paying $128 per month for that. That same $128 per month, it only costs them 50 cents at a data center, right? So how is it that I'm getting charged over 100x based on what that underlying wholesale rate is? And what the power of decentralization and really distributed infrastructure is that you can team up together to beat the big guys, right? You can go directly to the wholesale source to be able to get people cheaper internet. And I think we're seeing wireless technology, at least in our case, be kind of this transformative barrier that is getting broken, where now anybody can participate and get internet for super cheap rates. And we're seeing it with things like SpaceX's Starlink solution, Amazon's Leo solution. Wireless is kind of just reducing and removing the barrier to entry, and now everybody can actually get involved to start building their own mini networks together.
So DePIN has advanced a lot since, I guess, the seed of an idea really came to public consciousness. But what is the state of internet infrastructure today that either poses as a challenge or as a new opportunity for DePIN infrastructure to really proliferate?
Yeah, I think the barrier to entries have historically been on requiring massive amounts of capital investment, right? Like in our case, in the wireless side, or even traditional internet, right? If you're a fiber company and you want to provide internet to people because fiber is the only technology you have to spend hundreds of thousands of dollars to light up even a neighborhood. But wireless is now allowing us to actually provide coverage for only a couple $100 in a neighborhood, right? We're in a scenario where just the barrier to entry has just calmed down. And we're seeing other great examples, like a good one is, my friend Jason from Daylight. He's building essentially a system that allows you to do a micro power plant in people's homes that's a combination of solar and battery, right? All of these technologies are making distribution more possible at a macro scale. And now it's really just about the orchestration layer, the capital markets that really allow these things to happen at scale. And I think we're just kind of seeing all those capital markets mature.
We talk a lot about access. You're talking about your challenge with internet in Princeton, New Jersey. But I think if we're being honest with ourselves, we're all privileged to be able to pay a $128 internet bill. I think where DeepIn really starts to look interesting is when we look at regions all over the world that don't have access to infrastructure. Talk to us a little bit about where you're looking globally and where you're seeing DeepIn really solve problems for people when it comes to access to internet or access to really basic things that we take for granted, like electricity.
The best example that I can give is actually a deployment partner that we have in Accra, Ghana. So right in the capital of Ghana, it's incredible. You have such massive wealth disparity in that area, but what's very interesting is because of the growth of like mobile infrastructure, the wholesale infrastructure, the data centers are really good and really high quality. Like if you were to blindfold somebody, put them in a data center in Accra, you would never know if you're in an emerging market or if you're in a hyper-developed market like New York. That's how good the wholesale infrastructure is. But to your point, it's really that last mile infrastructure that just has a long way to go. And so we actually work with the local fiber deployment provider that's there to actually scale this over to hundreds of thousands of homes in the most cost-sensitive areas of Accra. So I think what you said is exactly right. We're seeing that because of the growth of the cloud, because of the growth of mobile service, wholesale infrastructure is in a really good spot, but it's really that last mile infrastructure that needs to go the little bit of extra mile. And fortunately, that's the power of crypto and incentives and coordination, is that people who don't know each other can work to achieve a really big goal together.
So when we enable that level of connectivity, what are the new things that unlocks?
The biggest one is, at least in the case of emerging markets, is I want to see people stop paying per byte of data and start paying for just the capacity of the pipe. Where like my home internet connection in the US, probably your guys as well, is you're paying for a limited amount of capacity that you can do whatever you want with. But the standard in areas where the last mile infrastructure is not as good is people pay per byte. So if you happen to fall asleep watching a YouTube video, like you might miss your internet payment for the month because you just consume too much data. And I think really we need to be in a scenario where the infrastructure is so good that it becomes less of a scarce resource, and then remote learning becomes possible, right? Like that's exactly the type of stuff that I want to see, is where people can use the internet to get access to all of the great things that it provides.
Before we go, we talk so much about disrupting centralized firms, disrupting the firms that have a grasp on the different industries that we're talking about here. Is there a role for these large players in the DeepIn future?
Definitely is the case. And I think in the case of like the telecom side, Helium is like the classic example for this, right? Because in the case of Helium, they realize the power of decentralization and distributed technology, and that's why folks like AT&T and T-Mobile have the deal with Helium, because they know they can bring them to a consumer segment that they couldn't get to otherwise. You're talking about malls, you're talking about airports, right? And it's just a simple software change that was really pioneered by Helium is what allows you to take advantage of that. So they realize the power of crypto, the value that comes from the distribution that it provides, and how the incentives can kind of fill these pockets that the big guys can't move fast enough to cover.
Neil, thanks so much for joining us and giving us that little crash course in DeepIn. It's always so interesting to unpack it. So thanks for joining us at the desk.
Been my pleasure, guys. Thank you.
That was Neil Chatterjee, CEO and co-founder of Andrina and Dawn. We are taking a quick break. When we come back, more from Solana's Breakpoint.
From a small trading port to one of Asia's economic tigers, Hong Kong built a reputation on something rare: the ability to take fast-moving markets and give them structure. For half a century, global capital came here for one reason: Hong Kong knew how to turn frontier markets into functioning ones. Whether it was the first wave of Asian IPOs, the rise of multinational deal-making in the 90s, or the deep liquidity that defined the 2000s, Hong Kong made complexity investable. And now, the frontier has shifted again. Internet capital markets, a new system of finance being built at internet speed. And Hong Kong is once again doing what it does best: designing rules that invite innovation. This February, Solana Accelerate lands in Hong Kong, side by side with Consensus Hong Kong. We will bring founders, institutions, and policymakers into the same room, the same energy, the same opportunity, because Hong Kong turns experiments into industries. To get your tickets, head to solana.com/events. Solana Accelerate Hong Kong. See you soon.
Hey everyone, welcome back to our programming from Solana Breakpoint. We are joined now by Solana Foundation's Head of Consumer, Pedro Miranda. Hello.
Thanks for having me.
Thanks for being here. Marissa and I have been talking so much about consumer and a product market fit.
Yeah.
And so we are so excited to end the show with you. Talk to us a little bit about what's going on in the Solana ecosystem and how you're really thinking about that customer experience.
Yeah, totally. I like to say that it's the most fun vertical to work in, so I appreciate those kind words. In terms of the Solana consumer ecosystem right now, I think there are two major trends. Obviously, you're seeing prediction markets in the mainstream capturing the attention of everyone. We recently saw Kalshi announce that they're powering liquidity on all of their markets on Solana through Jupiter and DFlow. You're going to see major front ends in the Solana ecosystem tap into the liquidity and actually offer a unique customer experience, composability. What does it look like to actually lend against your prediction or send your prediction position to your friend? All sorts of interesting primitives build that are not possible in Web 2. And then also we have to talk about crypto native assets, specifically IP. So you recently had Moonbirds, Spencer Hedberg here. He's leveraging Solana as a distribution channel for his new Burb token. Austin as well, who is left the core team of Doodles and now is building a storytelling project called Nuko. He's going to be using Solana as well as a distribution channel for collectibles for his token and also to build out his community. So it's essentially using Solana as this distribution channel for net new community and new consumer experiences.
So when we talk about consumer, it's a very nebulous term.
Yeah.
And so that presents the challenge of setting a scope around what the consumer objectives are and the priorities are. So what are the key things we're trying to deliver as value from the Solana ecosystem to that end user?
Yeah, absolutely. It goes back to the thesis of Solana, one asset for every market, but also every type of primitive. So when you think about that from the consumer experience and try to extrapolate that, you want to offer a diversity and a composable experience to the end consumer, i.e. you want to go to an application and you want to be able to take that asset, say a digital collectible from your favorite IP, and be able to sell it, lend against it, send it to your friend very easily across the globe. So the ability to actually focus on these composable experiences is something that we look for from the Solana Foundation's perspective, from the consumer founders that we talk to on that day-to-day basis, and as well offering net new liquidity, right? These are assets that traditionally have not been tokenized or monetized before. I think the Pudgy Penguins token is a good example of that on Solana. They're able to monetize and give back rewards to their fans. And that's something that we're going to be focusing on from the foundation, but also to try to spur in the ecosystem.
For people who are watching at home and think like, oh, I totally get collectibles. I used to collect Beanie Babies. I love plushies.
Yeah.
I love to go to the store and check out, like what new little gadgets are on the shelves. What's your answer to them as to why a token is needed?
Yeah, that's a great question. I actually think that collectibles are going to be a macro trend going forward into 2026. You see this notion of consumers across not only crypto, but outside of crypto, wanting this notion of accessible luxury, right? You see this with Labubu's, but you also see this with tokenized Pokemon cards. Tokenized Pokemon cards from Collector Crypt, which is one of the largest collectible platforms in crypto on Solana, actually onboarded a plethora of net new consumers who wanted instantaneous access to their packs in a digital form. In the Web 2 collector experience, there is no good digital collecting experience. One, you have to wait for your payment to hit on a platform like eBay a few days. 2, you have to trust the seller. So collectibles on chain actually makes a ton of sense, right? You get instantaneous access to your digital asset. You can choose to rip it and have a digital unveiling, or you can choose to sell it and monetize it right away. That same process takes a few weeks in real life. On chain, that takes about a few hours, if not minutes, in total.
We did see a lot of early experimentation around digital collectibles in the first wave of the NFT boom. We've now sort of seen the pendulum swing over to physical collectibles just because they're a lot cuter, they're a lot more fun to hold, they're a lot more fun to play with and have that unboxing experience. And now it sort of feels like we're kind of finding this middle line through that and also creating new marketplaces for that, I guess, speculative value component of collectible culture, but bringing it on chain. What's the next iteration of that? Like, where are we headed with that?
Yeah, totally. I think going back to that trend of financialization of these fun assets, there's another team called Baxis, which tokenizes high-end whiskeys. It's the same notion of being able to access liquidity, for lack of a better word, and then also being able to actually prove that you own a high vintage bottled whiskey. I think you're going to see that apply to different asset classes. Sneakers, there's probably a huge pipeline of sneakerheads who come into crypto. You're going to see a lot of exotic assets being created on a high-performant blockchain such as Solana. Teams like Collector Crypt, like Fidgels, like Magic Eden are going to be leading the way and using Solana as the infrastructure for those markets.
So then you mentioned also that 2026 is going to be an even bigger year for collectibles, even bigger than 2025. But what are some of the other consumer trends that you have your eye on?
Yeah, so it's funny. I'm bullish on Gen Z as a demographic in terms of generating this consumer spend that we're seeing, not only on Solana, but also in the general economy. Like I mentioned before, prediction markets are going to continue to explode. But also one of my favorite announcements here at Breakpoint so far was that we're bringing Ripple or XRP to Solana. We're actually also working on bringing a lot of Dogecoin to Solana as well. So Solana is going to be the home of every single fun asset, not only in collectibles in Web 2 pertaining to sneakers, so Pokemon cards, but also these fun crypto native assets from Doge to Ripple to XRP, and we're going to see that trend continue in 2026.
Okay, stick with me here, all right?
Okay.
Is this the metaverse we always wanted?
I actually think so.
Yeah.
I do
waiting for that answer.
I do actually think so. I think Zuck was onto something here, right? I don't think it's this virtual visual experience, but I think it is the true RWA notion of linking a physical collectible and being able to send it to your friends, being able to sell it to a stranger across the internet in a trustless way, building social media applications on top of it. That's what we want to see more of, more consumer and social media experimentation, and we're going to enable that in 2026.
Pedro, you made my day. I've been trying to get someone to agree with me on this, and it feels like we're on the same wavelength. So thank you so much for coming to the desk.
Thanks for having me.
For closing the show out with us. And I look forward to this new version of the metaverse that is really coming to fruition in the Solana ecosystem.
It's the better metaverse on Solana.
All right, that was Solana Foundation Head of Consumer, Pedro Miranda. We are going to take a quick break. When we come back, a very special guest joins the show, so stick around.
From a small trading port to one of Asia's economic tigers, Hong Kong built a reputation on something rare: the ability to take fast-moving markets and give them structure. For half a century, global capital came here for one reason: Hong Kong knew how to turn frontier markets into functioning ones. Whether it was the first wave of Asian IPOs, the rise of multinational deal-making in the 90s, or the deep liquidity that defined the 2000s, Hong Kong made complexity investable. And now, the frontier has shifted again. Internet capital markets, a new system of finance being built at internet speed. And Hong Kong is once again doing what it does best: designing rules that invite innovation. This February, Solana Accelerate lands in Hong Kong, side by side with Consensus Hong Kong. We will bring founders, institutions, and policymakers into the same room, the same energy, the same opportunity, because Hong Kong turns experiments into industries. To get your tickets, head to solana.com/events. Solana Accelerate Hong Kong. See you soon.
welcome back to our show. We got some spiffy new gear. Maybe you could do a wide shot now and show all of my friends in our jackets. Here we are. You are watching CoinDesk Live. We are coming to you from Solana Breakpoint, where we have acquired purple Solana jackets. Danny Nelson is here, blast from the past.
Yeah, I'm
one
back.
of my favorite co-hosts from the Hash.
It's been a minute. That was my favorite show on CoinDesk, I have to say.
Well, you were my favorite person at CoinDesk. Now you've left us.
I've moved on. I'm at Bitwise now on the institutional side of crypto.
Danny's on the institutional side. We're going to talk about these jackets in just a second, but how's your Breakpoint been?
Breakpoint's been great. This is my 4th time at the conference, and each time I come, it gets a little bit different. When I started going in, when was it? I think it was 2021, 2022 in Portugal. Solana was a completely different network, and we've seen. I remember my favorite Breakpoint was 2022 because things started to get shaky because of a colleague of ours, Ian Allison, dropping this Alameda balance sheet. And by the end of Breakpoint, FTX had blown up, and all the Solana people stayed late at the conference to clean up the mess.
So what would you say your key learnings have been from this year versus your previous years?
From this year, I think the big takeaway for me has been the institutional march of crypto. I've been wearing a suit this whole time. No one else really is, so I can't say we've gotten too crazy just yet. But the way that crypto has evolved, the way that Solana has evolved, it's a network that really is being taken seriously by more people. Now with things like the Bitwise ETF, we've seen $600 million of inflows in the last couple months. It's like we had no idea that there would be that much uptake, and that's just a sign that institutions are really excited about Solana, and they're here, and that's partly why it's in Abu Dhabi. This is the capital of finance.
The Solana ETF, very successful. I think one of the most successful ETF launches, not out of crypto ETFs, but all ETFs for the year. Curious, in your new position over at Bitwise, how you're looking at the Solana ecosystem. What have been some of your takeaways from its performance in 2025?
Yeah, with the price performance aside, I think the most important developments for me has been new protocols coming to market, trying new ideas like MetaDAO, building things like ownership coins, and new sorts of launch pads for tokens. I think ICOs are coming back in a big way. I'm really excited about the way that Solana is also innovating, things like the Seeker phone, which we have here. I have one of the Seeker phones. I don't have it with me. The Solana, better known as the Solana phone, of course. It's really important that we try new pieces of hardware to get people more interested in crypto and move it into a mobile-first environment.
So we're basically looking at building more gateways, so institutional capital sort of being this signal that this is a safe place to start interacting and participating in these markets, and then through hardware devices that are actually getting people to directly touch and feel what this digital asset world really looks like.
Yes. Yeah, and being able to take your money on the go and being able to think, okay, well, I know that it's going to be safe. And with the Seeker in particular, also that opportunity to build new experiences, because it's not just a phone with a wallet. It's a phone with a wallet that's going to have a token. How that token will work, we're still waiting to find out. But just this idea that you can bootstrap economies and bootstrap networks, but through economic incentives, through tokens, tokenization being another topic entirely, that's what we are looking forward toward with the Seeker.
You brought up something really interesting. Solana has seen a lot of success in 2025 on the institutional side, of course, with the launch of the ETF in the United States, as well as some digital asset treasuries, some of which we've spoken about today, but also big success on the culture side, on the physical device side.
Yeah.
I hate to look meme token side. It's made interacting with crypto really easy, and I just am curious, when you look at other ecosystems, how does Solana compare when you look at the spectrum of how it's been able to develop?
Well, I think the best way to look at it is really through the event we're at now, the conference. When you think about networks and you think about conferences, all right, Bitcoin has the Bitcoin conference. That one is a singularly strange event, a mix of retail, libertarian, a lot of fun, but a very different sort of working environment. Ethereum, very decentralized. ETH Denver being one of the tentpole events. For the last couple of years, it's been held in an arena that also holds the big cattle show in Denver. So it kind of has that stank to it. So it's not great, but it's a genuine event, brings developers out. So that's one thing. Near has an event, Avalanche has an event, but no one has an event like Solana. No one has an event like Breakpoint. This year, I think 7,000 people have shown up to this. That's the biggest of all time for a Solana event. And I think they're just going to keep growing that because you see how many people are here, all the things they're building. I also think that the way they present information here really speaks to like the community. This is when you're talking about like the community behind a token. This one, at least when they throw an event, no one does it like them.
It's in this massive arena. We're in Etihad Arena. The experience has been an incredible one. There are lots of things to do, lots of things to see. Giant slide, we've talked about that. There's a workout thing. I think there's like a Wheel of Fortune, like wheel.
Yeah,
have you tried the
reflex
reaction
game?
timer?
No. That's my plan immediately after
I'm
this.
scared too.
Have you tried it yet?
No, I don't want to. I don't want to know how bad I am. I would be like, it's terrible.
I think you're great, Danny.
I think I might be great, but my reaction time might not be.
Okay,
You're too afraid of the power you would wield if you did too well.
Yeah.
That's me with the punching bag. Yeah.
I had a few more questions for
Sure.
you, but first we got to shout out Solana Spaces for these snazzy purple jackets. One of the things that you can acquire at Breakpoint, I mean, people at home can't acquire it, but maybe next time they'll be there, be here physically to acquire things like this. This is from Solana Spaces, an experiential retail pop-up, and wants to onboard folks through culture. That's a narrative we've heard a lot about a lot of the builders in the space, and so that is dope. My question for you now that you're a research analyst over at Bitwise, I feel like I can ask you for price predictions.
You can. I may or may not be able to give them. We're going to be, right now we're working on our end of year predictions as we always do. And so it's not ready yet, but we will have a price prediction for Solana for Bitcoin. We already have a long-term prediction for Bitcoin, but for Solana specifically, in the coming weeks, I do believe that we will have some prognostication on where Solana is going to go in 2026. So you'll just have to stay tuned.
What's the long-term Bitcoin prediction? I feel like it was recently adjusted.
Well, we have a piece called the Long-Term Capital Markets Assumptions piece. It's sort of written in a style that people usually take to the equities markets to understand where assets are going. And over time, we model out what we assume will happen to the network, how we think that allocators, like the positions they'll take instead of a 1% position, we think that over time they'll move it up to a 5%. And in those conditions, we think over, let's say, a decade, I don't know the exact year, but we do believe that Bitcoin to $1 million. So that's a good spot to be.
Bitcoin to $1 million.
I mean, plenty of exciting things to be excited about.
A lot of things to be excited about. Okay, I think we'll wrap it up there. Danny, thanks so much for joining us. Such a pleasure to see you again.
Good to be back.
Yeah, great to have you on the show. We'll have to do it again sometime soon. Marissa, thanks so much for co-hosting with me.
It was a joy and a pleasure.
And to everyone at home, thanks so much for watching our programming. It was such a pleasure to bring you 2 days of fantastic content from Solana Breakpoint. If you missed it, we have re-airs on all of our social platforms. The videos are up there. You can watch at your own convenience. Thanks again so much for watching, and we'll see you soon on CoinDesk.com.